India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning and it's expected to be a good morning because the positive overnight cues, I think, will rub off. I think it's more of the same all of this week, which is lower dollar, lower oil, and broadly higher equities. So we're coming to you live as always from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, good morning.
Hi, morning Prashant, morning Nigel. And with the way the market surged in the last, I think, half an hour yesterday, probably is telling us that there is a fair amount of fuel, some ammunition out there, 1% away from the all-time high. So let's see how it goes.
Well, and it appears now that August scare that we had is a distinct past, right? I mean, just August 2nd, August 5th, we were all wondering whether or not we're bracing for a bigger correction. All of those losses have been made up. So the bulls are fighting back.
As usual, right? Yeah. What's new?
The ferocity of the comeback is something which is very, very telling. It doesn't happen so fast. I mean, 10 days, the market loses 6-7%. And the next 10 days, it makes up for everything. And that is exactly what we've done. We'll sort of put out some historical data in terms of what it means for future returns a little later on the program. But as always, let's begin by telling you what you need to know as we begin a new trading session. So, you know, yesterday, same time, U.S. markets said were down a little bit. They'd broken this sort of 8-day streak. But, you know, I was saying that this is not, it's of no consequence because it was a slow drift lower. Mind you, on the way up, I mean, these are summer markets in the U.S. and, you know, volumes traditionally in this period are low. I mean, lower than average, sometimes 10, 20, 30, 50%, even 50%. So be that as it may, you have markets which have bounced back. So about 0.5% of the S&P, NASDAQ about 0.6%. And these are changes we are waking up to. Dollar index, it continues its fall. I think, 6 trading sessions back, the dollar index was at about 103 plus. We're at 101 now. And that's a big fall we've seen. Now, the major supports for the dollar index come in about the 100.3 to 100.82 levels. We're very close to it, precariously close to it. Under it, it perhaps opens up fresh downsides for the dollar index. We're probably talking about, the index moving into 2 digits. Oil was down once again. That's the other one. It's down 1.5%. We're at $76 a barrel. And this is quite something. It's broken below supports, which is 76.62, 76.98. What are these? These are the February and June 2024 lows. They also coincide with a 76.4% retracement of the move that we've seen for oil. So here again, it's too sharp, and there's some opinion that perhaps we see a bit of a tactical pullback, but this is marked weakness for an important commodity there. I just want to highlight data. Now, because macro data-wise, it was a very light session, this week largely is, there was one data point which usually gets ignored, which got outsized, sort of commentary and attention. So the US BLS, which compiles all economic data, they put out revisions for non-farm payrolls for the year ended, 12 months ended March 2024. And guess what? They've revised non-farm payrolls number lower by 818,000. I mean, the expectations out there on the street were between 300,000 to 500,000, maybe a little higher even, but this was certainly greater than expectations. What does this mean? This means that you adjust this, divide this by 12 and sort of take these number of jobs away from monthly additions. The adjusted job growth now stands at between 170 and 180,000 per month for 12 months ended March 2024 versus what was being, what the reported number was, which was 242,000. The import of this data is that the labor market was not as strong as what we all kind of sort of traded and looked at and analyzed, etc. It's weaker than what was reported. It's still stronger than usual, but it's weaker than what was reported. So I think that this only adds to the narrative that labor market is perhaps not as strong as some have been making it out to be. You also had July FOMC minutes, which were dovish. And the focus is, the dual mandate, employment and inflation for the Fed. But they're now saying perhaps labor data and the weakness there is more important to focus on. And we'll be more reactive to that as compared to inflation, which had been the focal point. You will hear from Powell at Jackson Hole. That's on Friday. And will he provide dovish reinforcement? We'll see. The markets are still toying between, is it going to be 25 or 50 basis point rate cuts in September? Will it tilt sort of expectations over on one side, 25 or 50, something we'll watch out for. Sort of circle back to the levels, and I think not very much changes. I've been saying this for the last 3-4 days now, 3 days, that we are perhaps looking at the path to a new all-time high. The previous high first is becoming clearer and clearer. Matter of time. So you saw a follow-up buying yesterday. You had a dip, early dip. It got bought. Spent the next few hours absolutely flat. And starting 245, you had a big surge. So it was a good session as far as the Nifty. And actually, even the Nifty Bank picked up pace quite a bit. So levels here for the Nifty, I'll start with supports, come in at 24,503, which is the 20-day moving average, and then the 40-day exponential moving average, which is 24,245. So these are the two levels on the downside which we need to defend. And of course, the upside, it's the highs. Bank Nifty pulled back nicely from lows. Supports here come in at 50,340 and then 50,178. These are nothing but the 50 and the 61.8% retracements of this very short impulse 3-day move higher that we've seen. And resistance for the Nifty Bank comes in at 51,025 and then 51,280, which is, as we said yesterday as well, the level where the index will meet a falling trend line for the Nifty Bank. GIFT Nifty will indicate how the start is looking like this morning. About a 60-odd point higher start, and why not? It's a pretty sort of conducive picture, globally speaking. Surbhi.
Absolutely. There's lots of green across Asian screens as well, Prashant. In fact, you're talking about the probability, right? Whether it's 50 basis points or 20 basis points. There will be a cut. I think that's almost a near certainty. How much? Well, if you go by the CME Fed Watch, then the probability of 25 basis points is far higher right now. 62% last time I checked those stats, and about 38% for a 50 basis points rate cut. So let's see which way the Fed finally tilts. Speaking of central bank action, there was the Bank of Korea meeting this morning. They've not done anything with rates. They've left the benchmark rates unchanged at around 3.5%. The data out of Japan continues to be very, very strong. Even this morning, we've got the composite PMI numbers out of Japan, and they're building on gains. The number has now climbed up to 53 from 52.5. So largely speaking, macros out of Japan are strong, while those out of the US have been patchy. And now we have to see what the central banks say. And Jackson Hole is going to be very, very interesting. It kickstarts later tonight. Tonight our time, US time kicks off. And then the Powell speech coming in tomorrow is going to be in focus. Well, let's come back home. Yesterday was a very interesting session because the market spent the entire day in a 100-point band and then decided to break out in the last 30 minutes or so. That took the Nifty to 24,700 plus, and now we're just about 1% away from the all-time highs. On the fund flow side, it's the same story repeating. Yesterday, the buying was quite pronounced, about 3,000 odd crores from the FIIs, a little more pronounced perhaps because of all the blocks that are happening. So we need to keep that in mind as well. FIIs were sellers to the extent of 800 crores. At least it wasn't a 4-digit sell figure. It was a 800 crore rupee sell number. Another interesting trend, and let's see if this continues today or not. Yesterday, the micro cap and the small cap space was buzzing, and how. Those indices were up about 1%. The market breadth, remember, was very, very strong. So is that going to remain the same? Is that where the action is shifting? That's what we need to see, because the Bank Nifty continues to underperform. It's a distance from its own all-time high, and there is no follow-through. It's always one day up, one day down. That kind of pattern playing out on the Bank Nifty. Finally, today I'll look out for the quick commerce space, because yesterday's comments made by the Commerce Minister, Mr. Piyush Goyal, they were noted. There was some reaction on stocks like Delivery and in fact even Zomato yesterday. Let's see how it plays out, whether this is just rhetoric and chatter at the political level, or indeed whether policy is going to be a little more stringent for the quick commerce players. Speaking of quick commerce, Zomato is going to be on our radar because the deals finally happened. They'd already declared their intent, and now there's a closure. They will be buying Paytm's ticketing business, Insider as it's called, and they're spending about 2,048, because Zomato said this very, very clearly, that going out is going to be the next big engine for the company after quick commerce And of course, the base business going out is the next big thing. So Zomato in focus as well. Nigel.
Well, that's right. And one of the reasons that we saw a late surge yesterday was the Nifty Bank. It played out the weekly expiry, and late in trade, that saw a big surge. So it ended as a bit of an underperformer, but there was a good bounce that we saw from the lows of the day on the Nifty Bank, as that graphic point tells you, which gives support to the Nifty as well, going by the overlap that we have out there. But the Nifty, well, it's on the 5-session winning streak. It's recovered all the losses. Remember, on August 2nd and August 5th, the global markets went into a correction for all of 3 sessions, I think. And after that, we did bounce back. So we're back above those levels that we saw on August 2nd itself. What did the FIs do? They unwound some mild longs, and they added some shorts. For the time being, the long positioning continues at around 52%, and in absolute terms as well. Both the clients as well as the FIs, they're mildly net long. You don't want them to be on the extreme of either end. So both of them, as of now, the clients as well as the FIs on the long side. One thing that I'm liking from the F&O space that's coming with regard to stock-specific action is that currently there are around 12 stocks that are on the F&O ban. Last week itself, that number had gone to around 20 stocks. So that number has come down. Normally, when there are too many stocks in the F&O ban, that gives you a bit of an uneasy feeling. And yesterday, you had couple of stocks that did come out of the F&O ban as well in yesterday's trading session. You know, you had Bandhan Bank that did come out as well from the F&O ban. So number of stocks coming down with regard to the number of stocks in F&O. Well, ban, you like that. Let's focus on the expiry then, because today is the weekly expiry that will be played out as well. You'll have the 24,800 call. Well, that was very active in trade, and the 24,700 put. So going by that level and going by the premium at around 50 rupees, the 24,850 to around 24,900 level, that becomes the resistance of the day. In all probability, we open closer to that. So we'll have to build on to gains, because that's the resistance zone, and that's what data is telling us, that the bears will want to defend this mark. But till the markets, they're holding above the 20 DMA, it continues to remain buy on dips, and the trend is up. For the near-term support today, going by the options data, it's at around 24,650. The Nifty Bank has underperformed. It underperformed yesterday as well, but now it's in a very, very tight range. It's holding very, very close to this crucial resistance mark. So you'll want it to get above that mark. It's ended closer around the 20 DMA, but around that 51,300 mark becomes extremely important. But it's a stock-specific market, so let's focus on the 2 stocks that I'm looking at. One is Vedanta. The stock has shown a good recovery from the recent lows. Remember, it corrected quite a bit after seeing that peak, and now, in fact, it's showing signs of coming back. So good bounce is what we have seen on Vedanta. There's the dollar index that's weaker, which is good for LME prices. Aluminium deficit as well, that those stocks have resurfaced. So Vedanta is a stock that I'll be tracking. And the other one is Godrej Properties. I was looking at the technical levels. It's very close to the 100 DMA. So that's going to be the important mark that, if it can hold on to this 2,850 odd mark, then maybe, in fact, it can bounce back. But that's the crucial mark. So I'm watching both these 2 stocks.
All right, Nigel, thanks very much for that. Some really sharp moves, especially on things like the dollar, which has been under pressure. We've Jerome Jean Hegeli, Group Chief Economist at Swiss RE now joining in. Jerome, great to have you with us here. I hope I got the name right. Apologies if I did not. Just a quick, and thank you for being here on CNBC TV18. Prashant this side. Did you see the BLS revisions out in the US overnight? And what do you make of it? Some 800,000 minus for the 12-month period ending March of 2024, which gets the monthly figure down to about 180,000 compared to 240 earlier. Is it a worrying signal? And what does it mean for Fed's policy response, if anything?
BLS, also the Bureau of Labor Statistics, as mentioned, revised down the last 12 months, the job figures report. But what we all know is the job market is not as strong as we believed it was, but it is still extremely strong. On average, you had about 175,000 jobs being created per month, and that's a very, very strong labor market still. It's weaker than we believed it was, but it is still very strong. What does it mean for the FOMC? I think it increases. It's not a game changer, but it increases the confidence for the Fed, for the FOMC to start cutting rates in September, to focus more on its growth mandate rather than its inflation mandate. So I think it increases the confidence to act, which I think is good news.
Jerome, hi, good morning. So the question is, how much of action and how frequent I think that's what the market's trying to understand, right? We were just looking at the probabilities in terms of whether it's a 50 basis points or 25 basis points. And I think the market believes that it'll probably be 25. But what do you forecast ahead? Let's say over the next 6 months, will we get frequent small cuts? And will the Fed indeed achieve that soft landing that everyone is hoping for?
Well, we still have to see whether that soft landing will be achieved. I mean, as we know, soft landing are extremely rare events. So I will still be cautious on that. This being said, the economic environment is strong in the US. It's still solid, even with the weaker job market growth. Actually, what we know is we needed less jobs to create the 2.8% of growth that we had seen in the second quarter, which is actually not a bad thing. I think that means for the Fed, no reason to panic. We can go ahead in small steps. I would forecast the Fed to cut policy rates by 3 times this year, 25 basis points, and then follow through also in 2025.
All right. Hi, Jerome. Good morning and good to see you in. So 2025, how many rate cuts are you penciling in? And what does all this mean for an emerging market like India? You know, we've been outperformers. We have plenty going for us. But we seem to be ignoring any kind of bad news. Your take on the emerging markets, particularly the Indian markets?
Well, first of all, I think that the bad news is not what's happening on the macro front, but the bad news is what could be happening on the geopolitical front. There's a lot of tail risk on that front. There's a lot of uncertainty on the geopolitical risk front. On the Fed, I would be forecasting around 2 to 3 rate cuts this year, and another 4 to 5 next year. Now, what does that mean for India? I think for India and for emerging markets, it's actually very good news that you have lower policy rates. Lower policy rates, it makes the financing conditions for hard currency debt much cheaper, and that helps emerging markets, and including India. And India is the fastest growing economy in the world. It's also the fastest growing insurance market in the world. And I think lower rates, which are going to come forward now in the US starting in September. I think that's also good news for India. And I think it also gives assurance to the central bank in India also to start cutting interest rates.
So India will be the pick among the emerging market basket?
I think India will continue to do very well. I have no question about that. The macro fundamentals are very strong. Portfolio flows are very strong. Maybe some sign of caution, which we need to look at, is the long carry trade unwind in Japan. If yen were to strengthen further, then India is exposed, because India has been the biggest recipient of Japanese equity inflows. But other than that, fundamentals are very strong in India, and I expect that to continue. So.
All right, we'll leave it there. Thank you very much for joining us. Great speaking with you, and appreciate you being here on CNBC-TV18. Well, let's get you some more opinion here. Parul Mittal of Standard Chartered Bank says that the rupee was stuck in a tight range over the week. She says the dollar demand from local banks remains strong and was primarily related to imports and forex reserve accumulation. She expects the dollar INR to trade in a range of between 83.75 to 84.15 to the dollar in the near term.
On bonds, Parul says that Indian markets traded in a very tight range due to lack of domestic cues, even as global rates declined on weak US data. She says the 10-year benchmark yield continues to be in a range of 6.84 to 6.9 in the near term. She adds that markets will closely watch Powell's Friday speech at Jackson Hole, which could provide direction to global yields and impact Indian bond yields as well. She says the 10-year benchmark bond yield is likely to trade in a range of 6.8 to 6.95 in the near term.
Well, we've got a lot of stock-specific action to track for you. Get at that in just a bit. But for the time being, we run you through all those stocks that we're tracking. We're looking at Zomato-Paytm, Kalyan Jewellers, Alchem Laboratories, Epigrel, Deepak Nitrite, PNG Health, and IRDA. All of them will be reacting to positive news flow. While we have Zen Technologies and India Grid Trust, that are stocks that could react to negative news flow. Well, time to slip into a short break. You come back, we'll get into further detail with all these top 10 stocks. Stay with us.
Welcome back. So the cues are positive. Let's talk about the stocks that should be on your radar today. Our team is standing by with the CNBC TV18 list of top stocks to watch. And topping that list has to be what else but Zomato, because the intention that they had declared earlier with respect to taking over Paytm's ticketing business, well, that's finally come through. So, Mangalam, give us the details.
Well, it's a win-win deal if there was any for both Zomato as well as Paytm. After months of reportage, speculation, and the companies talking about that as well, this deal has finally been announced. Zomato will buy Paytm's ticketing business for a little around 2,050 odd crores. They will buy event, sports and movie ticketing business from 197 Communications. Does that cause a dent to Zomato's cash? Not really. They have 12,500 crores of cash on their books already. What do they get in return for this? Well, the Paytm's ticketing business combined revenue in FY24 was close to 300 crores with adjusted EBITDA of almost 29 crores as well. So, you know, it is a business which is EBITDA profit making. But the more important part here is how does Zomato scale this? Well, their immediate target is to take this to a GMV of 10,000 crores, and that could be value unlocking as well. Remember, this is something that the company has been talking about as an opportunity post their first quarter itself, where Deepinder Goyal did say that they will add movies, sports ticketing, live performances in their new app, which is District, and going out will be the third largest B2C business emerging out of Zomato after Zomato and Blinkit itself. So the street will definitely take note of this. For Paytm, of course, they get rid of a non-core business and get 2,050 crores of cash as well. So a win-win.
Okay, all right. Mangalam, we'll keep an eye out on both those two stocks in today's trading session. Well, let's hop across to Nimesh. He's here to tell us about Kalyan Jewellers as well as Alchem. Morning, Nimesh.
Morning, Nigel. So the first is Kalyan Jewellers. In a surprise move, while the trend seems to be of promoters selling stake of late, in this particular case, the promoters are buying from Warburg Pincus. So the promoters are going to buy 2.3% stake from Warburg Pincus at around 535 rupees per share. The promoter identity holding will go up to 23% from 21%, but the overall promoter and promoter category stake will go up to 62% now. But do watch out for a clean out trade. I understand while Warburg is selling this 2.3% to promoters, the remaining 7% will come as a clean out trade, and that's when the institutional investors are likely to buy out. So big overhang from a private equity stake sale is likely to be over in Kalyan Jewellers.
Okay, all right. Got that, Nimesh. Thanks very much. So we'll watch out for both of those stocks. But just tell us about Alchem as well. There's another block trade and probably a promoter selling here as well?
Oh, yes. So in Alchem, there is a small block, 0.7% equity. The promoter family trust is looking to sell 8.5 lakh shares, and they've put a floor price of 56.16, which is a 3% discount to yesterday's closing price. It's a small block, and I understand the demand is going to be strong, which is why I'm going with green. But the fact is that the stock is rallied pretty hard of late. So, execution could be very important in case of Alchem. But since it's a small block and there is a strong demand, could be absorbed very swiftly is my sense.
Okay, all right, got that. Nimesh, we'll keep an eye out on both those two names. Let's hop across to Vivek. He's here to tell us about India Grid Trust. Morning, Vivek.
Well, good morning. IndiGrid or India Grid Trust will be in focus. A very large OFS is in the offing. So KKR affiliate Estorate is looking to sell up to 17.3% stake in the company, and the route that they've chosen is the offer for sale route. Now, the base size for this particular offer for sale is at close to 9.7%, 9.66% of the total units of the company, and there is an oversubscription size that could go up to 7.7% of the total units. The floor price for this particular OFS is at 132 rupees per share or 132 rupees per unit, a discount to the current market price. Now remember, Esoteric or KKR is actually the sponsor of IndiGrid, and it's also the majority shareholder of IndiGrid Investment Managers. They have a 74% stake over there. The brokers are Axis Capital, Ambit Capital and SBI Cap Securities, going with the red on the back of the fact that there is a discount for this particular OFS.
All right, well, sales and block sales and that continues, right? So another one is Zen Technologies. Abhishek is here with details on this one. Abhishek, morning.
Morning, Prashant. So sources do tell us that Zentech has launched a QIP. The base issue size is about 800 crore, which can be upsized to about 1,000 crore based on the demand that they get. So base issue forms about 5.95% of equity dilution, and if they use the green shoe option of 200 crore, it would mean a dilution of close to 7.4%. The pricing is at 1,601 per share, steep discount of more than 10% to yesterday's closing price, and about 5% discount to SEBI floor price that they have. The lock-in period for existing promoters would be, 60 days. The use of proceeds says that funding working capital requirement, funding inorganic growth opportunity that they see via acquisition and other strategic initiatives as well, and for general corporate purpose. The BRLM are ICICI Securities, Motilal Oswal as well as Nuvama to this issue. Back to you.
Okay, all right. We'll watch out for Zentech. Thanks, Abhishek, for that. Let's go across to Sonal, who's watching out for a couple of stocks as well. Sonal, which ones are these?
Well, watching out for 3 chemical names. Let me start with Epigral, because there is an anti-dumping duty which has been imposed on epichlorohydrin, and this is for imports from Korea, China and Thailand as well. This application was made by Epigral. The domestic producers other than that are Grasim and DCM Shriram. Analysts say this will benefit Epigral as there will be an increase to around 10 to 15% in epichlorohydrin prices in the domestic market, and that would mean a 10% increase in their EPS estimates overall as well. So going with green there. For Deepak Nitrite and Deepak Fertilizers as well, the DGTR has gone ahead and recommended an anti-dumping duty on IPA, which is isopropyl alcohol. However, this is subject to approval from Ministry of Finance. Conversation suggests that they would go ahead and approve this. If that does happen, it will be beneficial for Deepak Nitrite and Deepak Fertilizers. They are the only 2 producers of IPA in the country, and this will lead to an incremental EBITDA of 120 crore rupees for both these companies. IIFL says this will increase earnings for Deepak Fert by 10% and Deepak Nitrite by 6%.
Okay, all right. Thanks a lot for that, Sonal. Well, let's focus on a couple of more stocks. PNG Health, that's a stock that I'm looking at. If you look at the headline numbers, that's the revenue as well as the profitability, you'll say both of them are lower. But still, we're going with green because the EBITDA number actually has grown in spite of seeing a degrowth on the top line, and that's why margins have gone up by around 200 basis points. So, that's a positive one. The other one we're looking at is IREDA. The stock has been a rank outperformer. We have quizzed the management numerous times here on the channel with regard to their fundraising plans, and they've hinted to us that sometime in this fiscal itself, they'll go ahead and do it. Now, we understand that they'll be considering raising up to 4,500 crores on August 29th, and the fundraise could be via an FPO, QIP, rights issue, preference issue. So going with green on both these 2 names.
Okay, all right. So that's IREDA that we'll also keep a track on. Let's quickly recap the list of all the stocks to watch today. The ones that have positive news flow around them are Zomato-Paytm, Kalyan Jewellers, Alchem Labs, Epigral, Deepak Nitrite, PNG Health and Irida. And the ones that have negative news flow around them are Zentech and India Grid Trust. All right, with that, let's go across to Manisha Gupta and get a roundup of all the commodity market action. Manisha, good morning. What are you watching out for?
Well, thank you for that, Surbi. I'm looking at the crude oil prices because today is the 4th straight day of decline coming in for the prices. With this, it is now trading at a January lows. There is demand concerns because of weak economic data. The U.S. non-farm payroll data has been revised down for the last year. And then the ceasefire conversation between Israel and Hamas is still on, while it really seems to be fizzling out right now. But the street is also looking at the probability of a rate cut, and that perhaps is what is still adding some support to prices. The bright spot in overall commodities clearly continues to be gold prices, holding above $2,500 an ounce. There has been dovish outlook from major central banks. Bond yields are low. Dollar index is trading at a 7-month lows, and the silver prices also are trading at a 2-month highs. We have seen this kind of support continue for the base metal prices also, where even after a bit of a profit taking in the Asian markets, metals like copper, aluminum, zinc, steel are still trading on the higher side of their range.
All right, Manisha, thank you very much for that. There's commodities in focus. We'll take a quick commercial break here. Deepan Mehta, director at Elixir Equities, is going to be with us on the other side. We talk about individual names, lots to discuss. So stay tuned. That's coming up.
Good.
Welcome back. So the cues are positive. Let's talk about the stocks that should be on your radar today. Our team is standing by with the CNBC-TV18 list of top stocks to watch. And topping that list has to be what else but Zomato, because the intention that they had declared earlier with respect to taking over Paytm's ticketing business, well, that's finally come through. So, Mangalam, give us the details.
Well, it's a win-win deal if there was any for both Zomato as well as Paytm. After months of reportage, speculation, and the companies talking about that as well, this deal has finally been announced. Zomato will buy Paytm's ticketing business for a little around 2,050 odd crores. They will buy event, sports and movie ticketing business from 197 Communications. Does that cause a dent to Zomato's cash? Not really. They have 12,500 crores of cash on their books already. What do they get in return for this? Well, the Paytm's ticketing business combined revenue in FY24 was close to 300 crores with adjusted EBITDA of almost 29 crores as well. So, you know, it is a business which is EBITDA profit making. But the more important part here is how does Zomato scale this? Well, their immediate target is to take this to a GMV of 10,000 crores, and that could be value unlocking as well. Remember, this is something that the company has been talking about as an opportunity post their first quarter itself, where Deepinder Goyal did say that they will add movies, sports ticketing, live performances in their new app, which is District, and going out will be the third largest B2C business emerging out of Zomato after Zomato and Blinkit itself. So the street will definitely take note of this. For Paytm, of course, they get rid of a non-core business and get 2,050 crores of cash as well. So a win-win.
Okay, all right. Mangalam, we'll keep an eye out on both those two stocks in today's trading session. Well, let's hop across to Nimesh. He's here to tell us about Kalyan Jewellers as well as Alchem. Morning, Nimesh.
Morning, Nigel. So the first is Kalyan Jewellers. In a surprise move, while the trend seems to be of promoters selling stake of late, in this particular case, the promoters are buying from Warburg Pincus. So the promoters are going to buy 2.3% stake from Warburg Pincus at around 535 rupees per share. The promoter identity holding will go up to 23% from 21%, but the overall promoter and promoter category stake will go up to 62% now. But do watch out for a clean out trade. I understand while Warburg is selling this 2.3% to promoters, the remaining 7% will come as a clean out trade, and that's when the institutional investors are likely to buy out. So big overhang from a private equity stake sale is likely to be over in Kalyan Jewellers.
Okay, all right. Got that, Nimesh. Thanks very much. So we'll watch out for both of those stocks. But just tell us about Alchem as well. There's another block trade and probably a promoter selling here as well?
Oh, yes. So in Alchem, there is a small block, 0.7% equity. The promoter family trust is looking to sell 8.5 lakh shares, and they've put a floor price of 56.16, which is a 3% discount to yesterday's closing price. It's a small block, and I understand the demand is going to be strong, which is why I'm going with green. But the fact is that the stock is rallied pretty hard of late. So, execution could be very important in case of Alchem. But since it's a small block and there is a strong demand, could be absorbed very swiftly is my sense.
Okay, all right, got that. Nimesh, we'll keep an eye out on both those two names. Let's hop across to Vivek. He's here to tell us about India Grid Trust. Morning, Vivek.
Well, good morning. IndiGrid or India Grid Trust will be in focus. A very large OFS is in the offing. So KKR affiliate Historic is looking to sell up to 17.3% stake in the company, and the route that they've chosen is the offer for sale route. Now, the base size for this particular offer for sale is at close to 9.7%, 9.66% of the total units of the company, and there is an oversubscription size that could go up to 7.7% of the total units. The floor price for this particular OFS is at 132 rupees per share or 132 rupees per unit, a discount to the current market price. Now remember, Esoteric or KKR is actually the sponsor of IndiGrid, and it's also the majority shareholder of IndiGrid Investment Managers. They have a 74% stake over there. The brokers are Axis Capital, Ambit Capital and SBI Cap Securities, going with the red on the back of the fact that there is a discount for this particular OFS.
All right, well, sales and block sales and that continues, right? So another one is Zen Technologies. Abhishek is here with details on this one. Abhishek, morning.
Morning, Prashant. So sources do tell us that Zentech has launched a QIP. The base issue size is about 800 crore, which can be upsized to about 1,000 crore based on the demand that they get. So base issue forms about 5.95% of equity dilution, and if they use the green shoe option of 200 crore, it would mean a dilution of close to 7.4%. The pricing is at 1,601 per share, steep discount of more than 10% to yesterday's closing price, and about 5% discount to SEBI floor price that they have. The lock-in period for existing promoters would be, 60 days. The use of proceeds says that funding working capital requirement, funding inorganic growth opportunity that they see via acquisition and other strategic initiatives as well, and for general corporate purpose. The BRLM are ICICI Securities, Motilal Oswal as well as Nuvama to this issue. Back to you.
Okay, all right. We'll watch out for Zentech. Thanks, Abhishek, for that. Let's go across to Sonal, who's watching out for a couple of stocks as well. Sonal, which ones are these?
Well, watching out for 3 chemical names. Let me start with Epigral, because there is an anti-dumping duty which has been imposed on epichlorohydrin, and this is for imports from Korea, China and Thailand as well. This application was made by Epigral. The domestic producers other than that are Grasim and DCM Shriram. Analysts say this will benefit Epigral as there will be an increase to around 10 to 15% in epichlorohydrin prices in the domestic market, and that would mean a 10% increase in their EPS estimates overall as well. So going with green there. For Deepak Nitrite and Deepak Fertilizers as well, the DGTR has gone ahead and recommended an anti-dumping duty on IPA, which is isopropyl alcohol. However, this is subject to approval from Ministry of Finance. Conversation suggests that they would go ahead and approve this. If that does happen, it will be beneficial for Deepak Nitrite and Deepak Fertilizers. They are the only 2 producers of IPA in the country, and this will lead to an incremental EBITDA of 120 crore rupees for both these companies. IIFL says this will increase earnings for Deepak Fert by 10% and Deepak Nitrite by 6%.
Okay, all right. Thanks a lot for that, Sonal. Well, let's focus on a couple of more stocks. PNG Health, that's a stock that I'm looking at. If you look at the headline numbers, that's the revenue as well as the profitability, you'll say both of them are lower. But still, we're going with green because the EBITDA number actually has grown in spite of seeing a degrowth on the top line, and that's why margins have gone up by around 200 basis points. So, that's a positive one. The other one we're looking at is IREDA. The stock has been a rank outperformer. We have quizzed the management numerous times here on the channel with regard to their fundraising plans, and they've hinted to us that sometime in this fiscal itself, they'll go ahead and do it. Now, we understand that they'll be considering raising up to 4,500 crores on August 29th, and the fundraise could be via an FPO, QIP, rights issue, preference issue. So going with green on both these 2 names.
Okay, all right. So that's IREDA that we'll also keep a track on. Let's quickly recap the list of all the stocks to watch today. The ones that have positive news flow around them are Zomato-Paytm, Kalyan Jewellers, Alchem Labs, Epigral, Deepak Nitrite, PNG Health and Irida. And the ones that have negative news flow around them are Zentech and India Grid Trust. All right, with that, let's go across to Manisha Gupta and get a roundup of all the commodity market action. Manisha, good morning. What are you watching out for?
Well, thank you for that, Surbi. I'm looking at the crude oil prices because today is the 4th straight day of decline coming in for the prices. With this, it is now trading at a January lows. There is demand concerns because of weak economic data. The U.S. non-farm payroll data has been revised down for the last year. And then the ceasefire conversation between Israel and Hamas is still on, while it really seems to be fizzling out right now. But the street is also looking at the probability of a rate cut, and that perhaps is what is still adding some support to prices. The bright spot in overall commodities clearly continues to be gold prices, holding above $2,500 an ounce. There has been dovish outlook from major central banks. Bond yields are low. Dollar index is trading at a 7-month lows, and the silver prices also are trading at a 2-month highs. We have seen this kind of support continue for the base metal prices also, where even after a bit of a profit taking in the Asian markets, metals like copper, aluminum, zinc, steel are still trading on the higher side of their range.
All right, Manisha, thank you very much for that. There's commodities in focus. We'll take a quick commercial break here. Deepan Mehta, director at Elixir Equities, is going to be with us on the other side. We talk about individual names, lots to discuss. So stay tuned. That's coming up.
शुभ काम में लड़कियां सबसे आगे रहती हैं।
इसलिए एसबीआई देता है हर नारी को होम लोन्स कंसेशनल इंटरेस्ट रेट्स पे,
ताकि घर के ओनरशिप में भी लड़कियों का नाम सबसे आगे रहे।
एसबीआई, बैटिंग फॉर नारी शक्ति।
And nothing should stop our soldiers from marching forward. To make this possible, somewhere a strong bridge has been built. At Ultratech, India's #1 cement, we believe that to keep growing, India needs to keep building. Ultratech Cement. As India builds, India grows.
Please eat, Dadu. Dadu, please eat. Are you trying to say that I can never become a pro at options trading? But I can, Dadu, because Samco's Options Bro is here. Options Bro. Now please eat.
Become an options trading pro with Samco.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
New car? Wow. Insurance लिया?
Of course.
Acco.
Acco पे है zero commission, full benefits and low premium.
अरे क्या 200-300 रुपए बचाने के लिए? कार इंश्योरेंस हो लेना तो Acco चेक कर लेना.
Philatex Fashion Limited's mining subsidiary, Philatex Mines and Minerals Private Limited, has secured a rupees 293 crore export order for about 3 lakh metric tons of white marble from Bloom Flora Ventures for 54 hospitals in Africa. The board has also approved Mr. Sunil Agarwal as additional director and CEO, pending shareholder confirmation. Additionally, the company has approved a 5-for-1 stock split, converting each 5 rupee equity share into 5 1 rupee shares. The stock split is fixed as 9th August 2024 to enhance liquidity and expand its shareholder base.
क्यों सुशीला पहचान नहीं पाई ना? हमारा रमेश अब एक ट्रेडर बनके अपने पैरों पे खड़ा हो गया सुशीला. टेक्निकल ट्रेंड्स, एफएनओ एक्शंस, डेली स्टॉक आइडियाज, हर चीज के लिए अलग-अलग.
रामू काका इस फड़फड़ाते परिंदे को समझाएं कि ये सारे फीचर्स तो एक ही जगह मिलते हैं. ऑन मनी कंट्रोल प्रो.
सही सुना. एड फ्री प्रीमियम कंटेंट, स्कैनर्स, इन्वेस्टमेंट चेकलिस्ट और बहुत कुछ. सब्सक्राइब टू मनी कंट्रोल प्रो.
चलो देखते हैं रेयांश सुपर क्यों है.
लाइफ हो या मार्केट, मैं एक नहीं कई कदम आगे रहता हूँ.
रेयांश का एंजल वन सुपर ऐप बनाता है उसे सुपर. इन्वेस्टमेंट्स इन सिक्योरिटीज मार्केट आर सब्जेक्ट टू मार्केट रिस्क्स. प्लीज रीड ऑल द रिलेटेड डॉक्यूमेंट्स केयरफुली बिफोर इन्वेस्टिंग.
Welcome back. Hope you're having a good morning. Well, we've listed down all the top stocks for you. So let's get some fundamental analysis going. We have Deepan Mehta, Director at Elixir Equities, who joins us on the show. Hi, Deepan. Good morning. Well, let's talk about the top story then. The deal between Zomato as well as Paytm. How do you read this, and which one would you be more bullish on from these levels?
Good morning, Nigel, and thank you for having me on your show. I think it's positive for both the companies. And Paytm, of course, I think improve the sentiment over there because that cash can be utilized better to grow the existing businesses where there are certain challenges, regulatory and competition-wise as well. And in terms of Zomato, it definitely opens up one more avenue to grow the business and to grow the company as a whole. But some amount of resources of top management and the company will go into developing the district brand and the app. In the past, Zomato has been very successful in creating such B2C businesses. Let's see how this shapes up. But definitely there is some synergy between existing businesses and the new business that they are attempting to scale up because of the number of subscribers and users which they have. So I think it's positive for both businesses. It's a right fit. It's not going to make an immediate difference to Zomato in the near term because it's a smaller business. But look, it just opens up one more avenue for growth going forward.
Fair enough. I was just looking at the target prices, and I think Jefferies is one of the biggest bulls. Now their target price after this is it's 335. So still a fair amount of upside from where the stock is. Deepan, hi, good morning. Good to have you on. It's block trade season all over again, and you're seeing so much of action where promoters are selling. Yesterday we saw the deal with Cyient, between Cyient and Cyient DLM. Anything that stands out? I mean, any specific trend or any stock that you'd want to call out? For instance, the Cyient transaction itself, and what do you make of it?
Yeah, so these things are very unpredictable. But I'm just scratching my head to figure out where is all this liquidity coming into the market to absorb these kind of block deals. So we have block deals on one side, and we have got these IPOs on the other side. The IPOs are getting listed also at fancy premium. And even every single correction in the secondary market also is being bought into. So it's just this liquidity, wave which is coming is showing no end at all. In fact, seems to be growing also at this point of time. And from what I gather from the investment banking and the stockbroking circles, is that whenever they are trying to do such a block deal, the demand far outweighs the supply, and the discounts also are significantly lower. So it's just we are just waiting and watching how this thing actually is playing out and as I said, scratching our head as to how longer and how much more the liquidity is going to come into the market.
Well, it's coming, so it's coming, and it's coming in as like a flood, right? You know, and it's coming at a time when you've got one constituent, FIIs, which are still selling. I mean, they're still sitting out, and markets are at where they are. So it's quite incredible what we're seeing. Deepan, hi, good morning. You know, just a few names I want to sort of ask you about. The life insurers are seeing steady but measured moves, but they're moving higher, slowly but steadily. We've got a discussion with a Bernstein analyst at 9 o'clock, so you may want to listen in later. But if you own any there, you know, you had names like Century Textiles, which moved up very sharply. PNB Housing, I don't know if you own it or you have a view. Again, there was a clean out trade. You know, someone was comparing this one to, you know, other entities where there have been clean out trades. Large investors have gotten out, the stock's gotten re-rated. I'm not sure if you have a view here. And Edelweiss is into 3 digits now. I don't know if you picked up anything here.
Yeah, Prashant, good morning. I think in terms of insurance companies, we are still quite optimistic on LIC. The stock market, rise in stock market prices certainly will increase the enterprise value of the company. And by and large, they're able to grow the business despite so much of competition. But of course, the best in class is HDFC Life, but look, it's really expensive as well. But insurance is a good, stable business, nice, slow compounder. And if you want to get a slightly defensive tint to your portfolio, then insurance certainly fits that criteria. Century Textiles, more of a real estate play. And the way real estate prices have gone up, the breakup value or the net asset value of Century, I think is significantly higher. Analysts may be underestimating what sales realization they can get from their existing real estate projects. And apart from that, you know, I don't know which is the third company which you spoke about.
PNB Housing.
PNB Housing, yeah. See, I think they have largely cleaned up their books. The NPA levels certainly have come down. But look, there's a lot of competition within the housing finance industry. No doubt volumes are higher because of higher real estate sales. But you know, it's been a cheap stock for many years or so, and I don't see any reason why it should get re-rated higher. And there's so much of over ownership when it comes to NBFCs and banks that I think investors should look for new ideas or new investment themes rather than just the banks and NBFCs, which seem to be over-owned across all portfolios.
But since you're just talking about banks, you know, appears the overweight stance is continuing. I just want to ask you about two relative underperformers, RBL Bank as well as Bandhan Bank. Both of them were up 3.5% to 4.5% in yesterday's trade. Any view out there? Because, you know, from the peak, the stocks are still considerable distance away.
Yeah, that's right, Nigel. I think both these banks, they destroyed a lot of value. They held a lot of promise at one point of time. They were, you know, largely promoted and grew with very iconic CEOs, but then the market was let down by all the kind of NPAs which crept up. And end of the day, their valuation multiples also significantly contracted and a lot of value was destroyed. But I think under new management, we are seeing a quiet turnaround. All the NPAs seem to be more or less provided for. And I think they're raising good amount of, first of all, they have good capital adequacy, so they can grow the credit book also steadily. And the way the valuations were a significant discount to their peer group, there is certainly a case for the P's or the price to book to be re-rated. And that is what is happening. I think going forward, their earnings will be more or less in line with other private sector banks, and that certainly is positive. So you could expect some more outperformance from both these companies because they are kind of turnaround candidates.
Okay. Just checking, Deepan, in case you've had a look at IRDA of late, it's in news because they are looking to raise some money. I mean, we don't know what the government's view is going to be on divestment, but in the meantime, a company like IRDA is looking to raise some money. They may do a QIP or maybe an OFS. Any sense on the stock?
Yeah, Shilpi, it's a good story, but when you look at the valuations and compare to other NBFCs, no doubt it has a niche. It is into renewable energy, but it's not that other NBFCs or other banks cannot finance renewable projects. And right now, renewables are in focus. They are kind of, got the fancy of the street. So from that point of view, IRDA is getting a very rich price to book, price to earnings multiple. It's run up also significantly. So I'm not sure I want to participate or enter at these levels. I think existing shareholders, it's an easy decision. You remain invested because it is quite a favored stock. Sentiment is at all-time high. Floating stock is low. And such, fundraisers certainly will incrementally improve the earnings per share.
Vedanta, do you have a view, Deepan? As an upgrade also this morning.
No, I think it's a good story, and there is a value unlocking opportunity when all the businesses are split. And with every passing week, month, or quarter, the kind of risk factor with debt at the holding company is gradually reducing. First of all, this OFS was there, Hindustan Zinc, and when they split the companies, I'm sure one or two may be sold off 100%, and that will go towards reducing the debt. It's just that I think the commodity cycle is turning negative, and it's a cyclical business. So at some point of time, when you're at the bottom of the cycle, when it comes to commodities, especially copper, aluminium, that's a good entry point, and zinc as well. That's a good entry point for Vedanta. I wouldn't want to buy at these levels because I expect in 2-3 quarters, you may see disappointing or lower year-on-year profits as well. So while it's a good story and there's some value unlocking opportunity, I think I just want to wait and watch.
Okay. Deepan, stay on with us. We'll come back to you in just a minute. There is some good news coming in for Bajaj Auto, it seems. This is source-based information that our colleague Parikshit is picking up with respect to perhaps some PLI benefits that could be coming the company's way. Parikshit, good morning. Tell us more.
Well, yes, the DVA application clearance for Bajaj Auto and a few other auto companies came in yesterday. That is the 21st of August. And the good news there for Bajaj Auto is that the company had applied for PLI incentives on 13 products in the two-wheeler space, in the three-wheeler space, and these are essentially zero-emission vehicles. And the Ministry of Heavy Industries, the nodal ministry for the auto industry, has confirmed that the company qualifies the domestic value addition criteria and is now eligible for incentives. So the incentives will be rolled out in the next few months. We don't have an immediate timeline for that, but overall it is a good news for the company. Other companies like Ola Electric have made 5 applications so far, and Ola Electric has received approval for 4 of those applications. TVS Motor Company has applied for 5 products. They have received approval for 2. Tata Motors for 27 products, and they've received approval for 15. Mahindra & Mahindra have applied for 23 products, and they've received PLI approval for 16. So this makes Bajaj Auto the only company to receive the approval under PLI scheme for all the products it has applied for so far. So this definitely could be a positive for the stock.
All right, Parikshit, thank you very much for that. So that's Bajaj in focus, but also other automakers, but Bajaj in particular because it's the only company, as Parikshit said, receiving a PLI approval for everything, for all the vehicles. Deepan, any thoughts on this one, Bajaj specifically?
Well, I think incrementally positive news and certainly will improve the sentiment. And look, the markets are such, just now, Prashant, that any positive news is having an extended and exaggerated move in the stock price. So it's going to be a great trading opportunity in Bajaj Auto. But look, I think auto industry certainly is slowing down. The monthly numbers are showing it. And the entire benefit of higher realizations, that also is now kind of stabilizing, or I would say stagnating. I'd be a bit cautious in the auto industry. You still want to play it. I think Hero MotoCorp is a good play because of the rural kind of exposure which they have. And monsoons are exceptionally good. The wedding season also will pick up. So you could expect some outperformance there. And it's, I think, among the cheaper of the auto two-wheeler companies or so. But on the whole, as a sector, I want to be neutral to slightly cautious.
No Ola Electric, Deepan? So sticking with Hero Moto, the tried and tested.
No, I think from a risk-return profile, I would say Hero MotoCorp, even a Bajaj, Eicher, are far better than Ola Electric. Look, it's really, really expensive at these levels. But, all the floating stock has got absorbed. There's a lot of speculative and trading activity in it. A lot of BTST players also have kind of climbed onto this bandwagon. Valuations just do not make sense. It's not like a platform company like Zomato or Paytm, which has great operating leverages once the revenues grow. End of the day, this company has got a high amount of variable costs as well. There are execution risks. There are consumer acceptance risks. So just too many risk factors for us to give this kind of valuation.
No, I take your point, and I think that's a really important distinction to make, what you just highlighted, that this is not a Zomato, this is not a platform company, it's a very different business. And just because Zomato had a certain trajectory, to extrapolate and say all new age companies will have the same, I think that would be not the right path perhaps for investors to take. So thank you for placing that on the table as well. But right now we're going to focus on CAMS. From the sidelines of the Motilal Oswal 20th Annual Global Investor Conference, our colleague Vamakshi caught up with the CAMS CFO, Ram Sharan Sesharaman, and the Deputy COO of the company, Somendu Ganguly. And she began by asking them about the rising SIP redemptions and net growth trends in the underlying asset base.
We are seeing a narrative of continuous growth in SIP from a gross perspective on a month-on-month basis. So it's driven by obviously the higher retail participation that we are seeing, and it's good for the entire industry because all of this is going to a long-term capital formation. On a net basis, yes, we do see some amount of redemptions that are happening from SIP, but over the last 2 years, we have seen a constant between 40 to 50% of the gross SIP staying out as net SIP. So from an overall perspective, you see AMFI numbers, it was around 23,000 crores of gross that came in the last month. And, almost 40 to 45% is actually staying back as net SIP. So I think this is still healthy growth that we are seeing from overall MF perspective. And adding to the valuation gains that you're seeing, the assets under management have seen a very, very healthy growth. Over the last quarter, we had more than 30% growth in assets. And the last year, it was more than 20%. So all very good underlying, metrics for the industry for a future growth.
You have also undertaken a strategic partnership with Google Cloud to redesign your RTA platform. Now, of course, this is a long gestation project which could take somewhere around 4 to 5 years, as you mentioned in the past. But how would you transition to this? What would be the incremental benefits as well as the cost that you will incur? And what would be the subsequent impact on the margins?
So how we are looking at this project is we have thought of, we are seeing the retail participation increasing in MF. We also understand that the retail investor has very different expectation set compared to what a normal investor would see, right? And as the retail investor also experiences Zomato and Swiggy and services like that, their expectations from mutual fund business is also becoming similar. So we understand that as retail participation increases, volumes grow, the ability of the current platform to scale to deliver to those expectations may get limited. And that is the reason why we have undertaken this initiative where we are rebuilding the entire RTA platform ground up on cloud. So that is where Google comes in, and how we are thinking about it is phases where there are parts of my transaction platform where I first accept a transaction and then do validations, unit allocation, I do communication. So we'll do it in phases where of the platform onto cloud, I still continue to process and give gains. We front end of and also the time and latency benefits that I get from cloud. And it will have significant costs. The net cost of the project will be within 100 crores in over the next 5 years, and the impact on margin will be very limited.
Sure. And Mr. Ganguly, let's also discuss your non-MF business. It has been outpacing the growth in the MF business. Do you expect this to continue, and which part of the non-MF business is expected to drive this growth going forward?
See, in the non-MF side, we have majorly 6 businesses. We see that the top 2 ones of that, which is the KRA business and the payments business, has been growing very nicely over the last 3 or 4 quarters. KRA has posted a 100% YOY growth. Payments is also growing because fueled by the retail participation increase in mutual funds. CAMS Pay is a leader in the UPI Auto Pay segment. And fueled by SIP growth, we are seeing a very healthy growth percentage in the CAMS Pay business. So those 2 businesses will continue to do very well. AIF has been posting steady growth rates of close to 15% YOY, and we believe that will also continue. The other three businesses, which is basically our insurance repository business, account aggregator and NPS, out of that insurance repository business has been doing well, and we have just launched a service layer on top of the entire insurance repository offering, where we believe that it will see large retail participation and thus should be accretive to the revenue numbers as well as the margins. Account aggregator is in very initial state of growth. I mean, the entire market is trying to figure out how account aggregator will be used and what are the different use cases that account aggregator can be used for. So I think that business will take a little more time to mature. So while it has started producing revenues upwards of 1 crore a quarter, but it will take a little more time to mature up and scale in terms of revenue. NPS, the last of these 6 businesses, will take a little longer to really scale.
So just to add to that, in terms of growth, you're right. We have been the non-MF business has been outpacing the MF growth, and what was actually a sub 10% share of the overall revenue last year is now crept up to more than 13.5% of overall revenue. The stated objective of CAMS is that over a period of the next 3 years, this will get to 20% of overall revenue, and minded that this is on the back of a healthy growth that we expect from a mutual fund perspective also. So we do have high expectations of the businesses that Somendu spoke about, should get us to a stage of 20% of overall revenue over the next 3 years.
Help us understand the margin differential between the MF and the non-MF business that is there currently. What non-MF businesses are yet to break even, and how would margins on a consolidated basis look like in FY25 and beyond that?
So, I'll just like to clarify that there are 6 businesses that we are tracking in non-MF business, the MF plus 6 strategy, and all of them are not homogeneous businesses. They have different market drivers, they have different customer, go-to-market strategies, etc. But just for simplicity of understanding, suppose I put them all in a single bucket. And we were in an investment phase on the non-MF business for the last 3 years. We invested heavily on the platform building, on the sales capabilities and the go-to-market. I think we have come to a stage where they have reached, where revenue has started to come in on all these businesses. Individual businesses, KRA is a very profitable business, and so is CAMSPay, and AF is reasonably profitable. We are close to break even on an insurance repository, and account aggregator is probably more than a few quarters away in terms of break even. But the margin profile on a whole for the non-MF, which was less than 10% in the last year, has crept up to close to 15%. And given that all of these are, none of these are labor arbitrage business, they're all platform-based business which show an increasing trend in profitability as and when the revenue scales up. We are confident that in the next couple of years' time, the steady-state margin will be upwards of 25% for the non-MF category.
Welcome back. You're with us here on Bazaar, and we are sort of ticking down to the market pre-open, 4 minutes away. Mitesh and Sudarshan are with us with what they want you to do as we kick off another session. Gentlemen, morning. Mitesh, what's the recommendation? Nice pullback in the end, last 45 minutes yesterday.
Good morning, Prashant. So I think, the only piece, which is missing on the upside is possibly participation or strong move from the Bank Nifty. And I was highlighting the point yesterday as well. I think today could be a day when the Bank Nifty could pick up. So on the Nifty, I'm watching 24,850 and then 25,080 as two upside targets. And on the Bank Nifty, I think 51,000, which was the day before yesterday's high on an hourly, 2-hourly close chart. I think that should be the first target, but eventually we should look at 51,350, 400 as well. So trade with positive bias. We in fact will go with long calls on stock side as well. The idea is to believe that this gap up, if it gives you a mild intraday dip of 30-40 points post the gap up, I think that will be a buying chance, and look at buying into stocks as well as possibly the Bank Nifty.
All right, got it, Mitesh. Let's welcome Sudarshan as well. Morning, Sudarshan. Tell us, how do you approach trade? We've had a good run, 5-session winning streak, and we've recovered all the losses we saw earlier in August. How do you approach trade?
Yeah, good morning. Well, we have been consistently saying that this is an uptrend and we should be buying on dips. Although yesterday I did say we can step aside, but the market, doesn't want to step aside also. It just wants to keep going up relentlessly. The trend is up. There's no confusion on that. So every dip is a buying opportunity. Just be a little careful because today is that weekly Nifty expiry. But beyond that, if you see an intraday dip, buy the next week's options and carry the position forward. The chances are that eventually we should touch 25,000. That's a chance, but we have to go for it. The Bank Nifty is on the verge of a breakout, whether it does that or not, but it's worth going, taking a long position in it. The two sectors I'm watching today are IT and banks.
All right. What we'll do is we'll take a quick commercial break here. Sudarshan and Mitesh are with us. See you on the other side.
Welcome back. So just about 12 minutes ago, before the day's action kicks off, pre-open rates are coming through and the color is green. I mean, in step with what most of the Asian markets have been doing. About a 90-point pop on the Nifty in the pre-open. Let's go back to our technical experts, get some more trading ideas going. Sudarshan, so let's boil this down to stocks. What will you look at today?
Well, there are a lot of stocks where buying is possible. Marico is one of them. Consider buying Marico with a stop under 667. Grasim is a buy with a stop under 26.25. Vedant is another buying opportunity with a stop under 447. Actually, Hindalco is also a buy, but you really had to choose, and I chose Vedant. And Aditya Birla Capital is a buy with a stop under 218. Stay on the long side. Don't try to dabble with shorts.
No, absolutely. Look at the pre-open kicking off. 100 on the Nifty and 220 in the on the sensex right now. 3 minutes in. 5 more to go before the end of the pre-open. I think, Mitesh, what do you have in terms of specific trades?
Yeah. Prashant, the buy on Siemens with a stop at 70.30 for a first target of 72.50. Among the financials, I have Bank of Baroda as a buy for targets of 262 and a stop below 250. Chola Finance is a buy with a stop at 13.75 for a first target of 14.50. And Page Industries is the final buy call. Keep a stop below 41,200. Look for targets of around 42,350.
Okay. All right, gentlemen. Got those calls. Thanks very much. We'll come back to you a little closer to market open. And then we'll get some more inputs. For the timing, let's also look out for some F&O cues and F&O trades. We have Chandan Taparia joining in from Motilal Oswal Financial Services for exactly that. Chandan, hi. Good morning. So the market is looking green in the pre-open. What about your trades today, index and stocks?
Good morning, Surbhi, Prashant and Nigel. Thanks for having me. The Nifty has been forming higher highs, higher lows from last 4 trading sessions and supports are gradually shifting higher. We have seen a decent recovery of more than 3-4% of the previous decline and market has respected well above its 50-day exponential moving average. So the way the volatility is cooling down, the India VIX, which made high at 23, 12 days back, is now at 13 levels. CBI VIX has corrected in the US from 65 to 16 levels. Dow is also making higher tops, higher bottom in just 400 points away from the lifetime. All the data setup indicates that market is all set for the next leg of rally. However, we need to keep in mind and focus on the key event, that is the US Fed statement and US Fed meet. But behind that, if I look at the market setup, till it holds above 24,500 zone, overall, the momentum could continue to extend the rally towards the new lifetime high of 25,000, 25,100 level. Now, looking at the Bank Nifty index, Bank Nifty was continuously underperforming, but now it seems that double bottom has formed on the daily chart with multiple support at 49,650. It is struggling near its 50-day exponential moving average. So a small follow-up beyond 50,750 could open the short covering trigger of 500 to 700 points. So hold of 50,500 could see an up move towards 51,250, 51,500 level. Now looking at the stock wise, first that is buy on Hindustan Unilever. Nifty FMCG index has given a consolidation breakout and HUL is one of the strongest name which has formed a small triangle formation which has bullish implication. This formation is happening after the consolidative move of last 22 days. So recommending to buy with support of 2730 and HUL can head towards 29-20 level. Second trading idea, that is buy on SBI Life. We have seen positive price action in most of the insurance name, and SBI Life is one of the strongest price pattern, which is known as a pole inflate. So because of this pattern and consolidation breakout on the daily and the weekly, we are expecting a run up towards 1888. One can buy with support of 1755. Last trading idea, that is buy on Jubilant Food. The stock has been making high tops, high bottom on the weekly chart. It has seen a consolidation breakout of last 6-7 days. Positive momentum and the recent consolidation could aid the fresh leg of rally with built up of long position. So one can buy with support of 633, and we have a target towards 680 in the counter.
Okay, all right, got that. Thanks very much for that, Chandan. You have a good trading day, and we'll connect again soon. Well, with that, let's move on and put the focus on the insurance space. I mean, yesterday, once again, we saw a big surge in the life insurance stocks, the frontline ones, HDFC Life, SBI Life. They were all up and about. So is this just sector rotation taking place, or is there something underlying, the business fundamentals that are looking better? Well, let's ask that question to Manas Agarwal. He's Vice President Research at Bernstein. Manas, great to have you on. So there's so much happening, right, with the life insurance space over the last 1 year. We've seen so many changes with respect to taxation and, just regulation overall. So first of all, from a regulatory perspective, I mean, have things completely settled? And this recent bout of an up move, which has taken many stocks to their 52-week highs, what do you make of it?
Thanks for having me first up. Your question on regulations, I think all the known issues have been absorbed or reflected in last year numbers and prices. Surrender value impact, which is the last change that happened, a lot of people were fearing a larger impact. HDFC Life came out and guided towards a lower impact, and I think Max has come out and guided towards a higher impact, but still lower than what people are fearing. So prices have sort of started to move on that. Growth is coming back. The key debate now is whether whatever guidance has been given on margin impact on surrender value will hold true in the second half or not, which is something to see. I think growth should be fine even in the second half, and I think stocks are starting to reflect that. Implied growth for these companies, especially SBI and Max, is quite low on a long-term basis, meaning that valuations are not pricing in good growth in the near term or in the long term. And I think there's opportunity for investors to look at that in that sense.
What are your, Manas, morning, Prashant here. What are the best sort of long-term ideas from you where there is safety and there is growth as well? And what should we expect in terms of returns here?
Sure. So the way I think about it, life insurance penetration story is there for the long run growth. Valuations right now are not very onerous, reasonably attractive as well, trading near or below long-term multiples. So I think the growth is going to come back with regulatory issues subsiding or largely priced in. I prefer private life insurers with good distribution support from their parent bank. So SBI Life, HDFC Life and Maxfin are the picks. About 30% upside in SBI Life, closer to 20% for Max, and closer to 15% for HDFC Life, I think.
Manas, just from a stock analysis perspective going forward, one issue you mentioned that we need to see if the guidance that's been given on the margin impact because of the surrender value norms, whether that really holds up or if the impact turns out to be bigger or not. So that's one point. But just going forward, because many of the stocks are now sitting at either at all-time highs or near all-time highs, what should we really watch out for from an investor perspective? Is the next kicker going to come in on the VNB margin front, or should the extent of APE growth, will that really determine how well stocks do? What should we have our eye on?
So I think this year APE growth will be punchy and probably higher than what people are baking in. The question really is on the product mix side, you're obviously going to have high ULIP till the point in time markets are doing well. And that will drag margins because your product mix is not going to be optimal. The other is obviously the impact on margins from surrender value issue getting implemented in the second half. So I think this year, like we've seen with Max, especially in the first quarter, something to look for is how product mix evolves, because top line growth, I think, should be punchy. If it's led by ULIPs, then probably margins will not be as punchy as people want them to be, and that could be an interim issue. But I think second half, you should see some normalization in product mix, and that should help margins for the year.
But I was just wondering, people talk about money going into stocks and that taking away money going into banks. What about equities versus insurance, Manas? Is that a thought which has popped in your head? Have you thought about it? Is that
sure? So
taking
definitely
away flows?
Yeah, definitely. Equity markets are doing what they're doing very strong. And that definitely takes away money from insurance into mutual funds in the short-term construct. Insurance companies benefit partly because they offer ULIPs, which allow people to take equity exposure combined with insurance. So both of them benefit, mutual funds benefit more. So that is true. I don't think it takes away deposits from the system. It's just changing of deposits from retail to wholesale, which has an LCR impact, which is what the governor has also talked about. So that's broadly how I think about it.
Got that. By the way, do you have coverage on PB FinTech, Manas? Do you look at it?
Yes. Yes.
And after the run-up, how are valuations now? Still attractive?
So valuations are the only real challenge with the stock, right? Everybody understands the business model is good, the growth's going to be punchy. I like the business model a lot for a couple of reasons. I think in the insurance construct, distributors extract more value than their fair share, and all of it is upfronted. So there's very little operational risk, no underwriting risk, no investment risk. So that makes the space interesting. Obviously, Policy Bazaar is online only and very high growth. So that's additional growth levers. Valuations is a stretch, but I think it probably will continue to deliver very strong growth ahead of expectations, keeping the stock up. I think long run, people don't, or let's put it this way, long run, I think there's value to be extracted or money to be made. Short run, probably valuations are now close to my target price as well, which also was a stretch. So we'll have to evaluate how second quarter, third quarter growth and profitability goes, because 1Q, they came back and said that we're going to focus on growth. So let's see where margins land up.
Okay, I appreciate you joining in, Manas, and giving us those views on the sector. We look forward to having a chat with you in the time to come. Let's focus on Shyam Metallics. In pre-open, that's one of the stocks that's buzzing around. UBS has initiated coverage on the stock. They have given a target price of around 1,200 rupees. And for starters, the stock has moved in that direction. They are valuing the stock at around 8 times EV upon EBITDA on the forward earnings. And they believe that the company is on track to compound in terms of EBITDA for the next few years. They are factoring in 39% EBITDA CAGR over 2024 to 2027. What makes the company stand out? They like the company's pragmatic approach to move up the value chain, diversifying products as well as metals, and also they talk about backward integration that's going to help them operationally. 3 big numbers they've given. VAP as a percentage of the total mix, they're expecting it to go to late 60s from early, from late 50s as of now on revenue as well as EBITDA. ROC, they see it move up to around 28% from around the 22% right now. And they believe that as of yesterday's price, well, the stock was factoring in EBITDA number of from 3,700 rupees, while they are working with a number in excess of around 6,000 rupees. Put all this together, the stock is up with a gain of close to around 7% in pre-open. Keep in mind the free float is very, very limited with the promoter holding at more than 75%.
All right. We've got the market open coming up, and we'll keep an eye out on Shyam Metallics. A couple other stocks as well, which we will get to in just a bit. But the first rates on the indices, 24,800 plus 830 is where we are starting. That's about 0.25% higher. This, of course, after yesterday's 70-point gain on the Nifty. The Bank Nifty is up about 0.4. And that also pulled back nicely towards the end of the day. It was looking sulky all day, and then it pulled back. You've got the sensex at about 81,100 plus. The IT index is starting 0.5% higher. The IT index took a bit of a break yesterday. It was FMCG and pharma which participated on the upside, sectorally speaking. And that's the heat map for you. So you can see there's I think about 10 stocks lower, 40 higher broadly. So it's overwhelmingly up and about at this point in time. 55 on the Nifty.
Just looking at some of these block trades that were happening. On Kalyan, I think the block has happened, at least one of them. The stock is up about 6%. Shah Metallics, which Nigel was alluding to, is off to a flying start on that UBS note. 8-9% up on Shah Metallics. So it's once again proving to be a day where the broader markets are really catching the attention. Zomato, taking over the ticketing business from Paytm. That stock's up about 2% as well. So some of these newsmakers are the big high flyers this morning. On the large cap screen, it's actually looking pretty okay. Grasim is the top leader, which is a rarity. Don't see that often. But Grasim is up almost 1%. Infosys is also gaining ground 1% higher. LTI, Mindtree, Wipro. So there's a bit of a technology flair to things. The Bank Nifty is actually doing better than the Nifty now. And that would be courtesy an ICICI Bank, Axis Bank, SBI, Indus chipping in. Let's see what HDFC Bank is doing. Yep, that's also on the upside, about 0.5% on the gaining side. So banks for a change are leading from the start. Let's see if that will continue. There is a bit of a cool-off on Dr. Reddy's after yesterday's big run. SBI Life also, we were just discussing the big move on life insurers yesterday. So again, a little bit of profit-taking, but nothing more than that, actually. The rest of the market's quite okay. Power Grid is the only Nifty stock that's down more than 1%. Other than that, it's actually a pretty green-looking screen. Reliance, all the biggies. HUL up about 0.5%. Reliance is up and about. So largely speaking, it's a good opening. 66 points at the start for the Nifty.
Well, that's right. Plenty of stocks moving around. Deepak Nitrite, that's up closer on 3.5%. Sonal told us earlier about the DGTR has recommended anti-dumping duty on isopropyl alcohol. So that stock is flying away. Manappuram Finance holding strong. It's up closer on 2.9%. So good up move is what you're seeing. Interglobe Aviation flying away. That stock is up closer around 3% as well. And Emphasis, that's probably actually the stock of the month because it saw a bit of a correction. And then from there, the stock has popped up. Today, we have a Nuvama note that's upgraded the stock as well. So that explains why Emphasis is up close to around 2.5%. What's doing well from the broader markets? Well, you have Shah Metallics, as should be mentioned, that's doing well. IRDA as well is up close to around 6% as we speak. They're looking at fundraising plans. They're going to be considering the same of around a quantum of around 4,500 crores on August 29. So that's why the street likes that. The stock is moving higher as we speak. Some of the top volume movers, actually. Ola Electric on the downside, that's one of the top volume movers. That's down close to around 2%. Some mild profit taking after the big run that we've seen out there. Reliance Park continues to remain in upper circuit, up close to around 5% or thereabouts. So it's a good opening, but the real strength is coming in from the broader markets. I have close to around 6 stocks that are advancing for every one stock that's declining. Keep in mind, at the bottom of your screen, a couple of companies are mulling buybacks. The street likes that. TCI flying away. Aarti Drugs, the other one that's doing well.
Paras Defense, 4.5% up. They've got an industrial license to set up an undertaking, I think, in New Bombay. So that stock's up and about on the back of that development. Interglobe, a couple of positive notes coming in, and that seems to be helping that stock as well. By the way, Cyient DLM continues to see more traction, 4% up on Cyient DLM. So plenty of movers and shakers. Once again, it's the broader market that seems to be racing ahead.
No, absolutely. We'll have Vikash Kumar Jain with us in just a bit from now. And I just want to highlight that, Paytm should come up on your screen. You want to see what that is doing. A lot of interest around this one. Stocks now moved up almost to about 600 rupees. Zomato is higher, but Paytm is also higher after that transaction yesterday. But it's widely expected. I remember discussing this with Nimesh on D Street Chatter, something that he'd highlighted earlier. So that has gone through. So I think from the highs of the day, it's kind of pulled back a little bit, but looking good. Zomato has also cooled off. It's up just about 1% now. So 262 on Zomato right now. And I think the high today is 268 nearly. So there again, there is a bit of a pullback which has happened. Kalyan Jewelers, the clean out trade, 5%, 5.5% higher. So that's a big one. Sham Metallics has moved up a little bit more. About 9% on Sham Metallics. It's basically Sham Metallics has moved up from $300 to 800 rupees in basically a year and a half. There is, of course, now sort of large institutional brokers coming out with coverage, etc. IREDA is up 6%, 252 on IREDA. Again, something that we were highlighting earlier. BEML is up about 2%. Plus, Aarti Drugs, I think we put out earlier. Deepak Nitrite is up about 4%. And I could go down, but then volumes start to flag a little bit. So I think we'll just sort of wait for more volumes to pick up. On the downside, apart from what we've kind of highlighted. Angel One is a loser. It's down about 2%, but again, that's on the back of the big sharp 25% plus jump that we've seen recently. So 26.41 on Angel One. And there is SJVN, Nelco, HFCL, Garden Reach, Philips Carbon Black, lots of stuff coming up with some amount of cuts through and through. So that is essentially the market action. The Nifty itself about 45 points higher. We're at about 24,815 at this point in time. So, let's actually highlight Interglobe Aviation. I think Nimesh is going to be with us to talk about this one, where there is a call which has come through, an upgrade. What else?
This is actually Jefferies. I was looking at it. We'll get Nimesh in a bit to talk about it. The target price that Jefferies is now putting on the stock is 5,225. So it is still a substantial up move that they're talking about. And what is Jefferies really saying? They're saying that the operating performance has consistently surprised on the upside of the last many months, over a year. And they're saying that the company has maneuvered quite successfully through a lot of the headwinds, whether it's capacity constraints or costs. So that's what's making them quite optimistic. There's HSBC as well. Even HSBC's price target is northwards of 5,000. Some of these positive notes seem to be rubbing off on Interglobe. And for all practical purposes, guys, and how many airlines are there in the country now? It's come down to that level, right? We all know SpiceJet's issues and the regulatory headwinds they're running into, and of course a lot of payment issues. So Interglobe, and the fact that we're getting into a festive season. I was reading somewhere, I didn't check it on the apps myself, but apparently tickets for Diwali, they're already running into thousands and thousands. I mean, if you're booking a Delhi-Bombay ticket. So
thousands and thousands, doesn't it could be 2,000, 3,000, 4,000?
No. Apparently, the headline of the piece I was reading was like 30,000 or something. Okay, so
you mean tens of thousands?
Tens of thousands. That's a better way of putting it. Yeah.
But no, absolutely. And by the way, of course, Indigo is now the analyst meet, the investor meet at 18 when they kind of sort of announce that they're going to have business class and they're really moving up the premium chain. So far, of course, it's been very efficiently run, and we'll, I think, have more on this one with Nimesh in a bit from now. But we have the management of Chola now joining us. If we do, we should sort of get them on. Okay, I think Nimesh should be with us in just a bit. So Jeffrey's coming up with that call. Let me actually I think we can go across to Nimesh now. Nimesh, take us through what Jeffrey is saying.
Hi, Prashant. The stock is buzzing in trade largely on back of a couple of upgrades which have come in on Interglobe Aviation today. But do remember, the very near-term headwind for the stock would be the potential sale of Gunwal. The 5-month lockup has got ended last week, so anytime that block can come. However, in terms of brokerage notes, Jefferies has today upgraded the stock to a buy from hold, and they've raised the target price now to 50 to 25. I guess most of the brokerages are between 5,200 to 5,600 in terms of target price on Interglobe. Now, they believe that the company's operating performance has consistently surprised positively in the last 12 to 18 months, and the fact that the industry capacity additions is very precarious, which would mean that the spreads are going to be quite healthy going forward as well. On back of all this, Jefferies has today actually raised the EPS estimates by 6 to 7% for FY26 and FY27. Even HSBC has put out a note on Interglobe Aviation. They've raised the target price now to 51.65. They believe that the addition of business class will mean that the monopoly of the competitors like Air India will end, and this will expand the business for Interglobe in the corporate category, and that's going to be a big chunk going forward for Indigo. So back of all this, even they have raised the target price. So multiple upgrades coming in, but do remember, as I said, the very short-term headwind for the stock would be the Gunwal stake sale. They still own 20% stake, and they've been selling every 150 days for 5 to 6% in the open market. So that's going to be a near-term headwind for the stock.
Got it. So we need to watch out for that. By the way, Nimesh, thanks very much for alerting us on Kalyan. Before we let you go, Kalyan is right now flying almost 6-7% higher. And Nimesh, remember, was alerting us that there will be blocks, and in all probability, you might have the promoters selling some stakes. So the blocks, I think, they've already happened, Nimesh, on Kalyan?
Yes, Surbhi. So there was a pre-open trade of close to 5.7%, which I understand the institutional investors have participated. And yesterday, the promoter entity did, announced officially that they're going to buy 2.3% stake. It's basically Warburg Pincus who've sold out completely after today's block deal. That's my understanding. They sold earlier this year as well, and this was the last trade. I think they were owning close to 8% to 9%. And with today's block deal, with promoters buying 2.5% and the remaining 5.7% bought by institutional investors, looks like it's a clean out trade. The overhang now from Warburg is largely over. The good part about today's block was that the promoters themselves have committed and bought 2.3% from Warburg Pincus. So, and again, it was done in a pre-open, so hardly any slippage and just 1% discount. So I guess that's the reason why the stock is reacting positively today.
Okay, got it. Yeah, I was wondering, so I kind of probably didn't hear it correctly earlier. So it seems that promoters have actually bought. Warburg has sold and promoters are committing more money to the company, and that's great news, and the market really likes that. Thank you so much, Nimesh, for all the details there on Interglobe as well as on Kalyan Jewellers, really turning out to be the stock of the morning. Well, let's move on from the sidelines of the Motilal Oswal 20th Annual Global Investor Conference. Mr. Ravindra Kumar Kundu is joining in. Has the rural market seen pressure due to elevated inflation? What about NPAs? Are they rising in the unsecured and the retail loan portfolios? And what about MFI? If you could just start by giving us an overview of the various segments, sir.
So in our vehicle finance, we have seen that it has gone up from 1.4 to 1.5, but this is cyclical. In quarter one, it actually moves up, and from quarter one to quarter two, it goes down, and that's how it actually moves throughout the year. So we are hoping that the NCL level going to be remain as similar to last year, and for the organization also, for entire Chola, our portfolio is going to be similar level. So there is no problem as far as vehicle and other businesses are concerned in Chola.
All right, so underlying volume sales are declining. Growth has slowed down as well. How do you see vehicle financing loan growth going ahead? There has been a price decline in some categories of vehicles, so I ask.
See, the manufacturer are talking about the wholesale number, which is actually going to be remain in the single digit in this financial year maybe. But we need to see our retail sales of the dealership, wherein the dealerships are having the inventory piled up to 60 days to 75 days. So the dealer sales are actually closer to 10 to 12%. And if you add the used vehicle financing, it automatically takes our disbursement level to 15%. We have delivered 13% last quarter, and hoping that this year we will be between 15 to 18%. And the monsoon has been so good that, in the festival season, we are expecting that the dealer sales as well as the wholesale number to go up. If that happens, we can even reach beyond 18% disbursement.
Well, we also have D. Arul Selvan, President and CFO of the company, with us here. Mr. Selvan, always great to speak with you, sir. Could you provide us with a net interest margin outlook? Cost of funds have gone up for you. What's going to be the trend over here in NIMS?
Confident that we can hold the cost of funds levels at the Q1 level because of 2-3 reasons. One, large part of our borrowings are treasury bill linked, and we are seeing the reduction in treasury bills happening, and that is getting favorably impacting us on the cost of funds side. Also, large part of our bank borrowings are priority sector linked, and where we are still able to negotiate with banks on the priority sector, so thereby holding the cost of funds. We don't see much increase happening, while we don't see reduction also happening in the repo rate. That would not impact us much because our pricing is mostly on the treasury bill linked.
Okay. Mr. Selvan, sir, your credit cost had increased quite a bit quarter on quarter in Q1. What is the trend now, and what are you seeing on the unsecured side of the business? Overall asset quality, what are the expectations? And also, if you could give us some ballpark idea of credit cost for the current year.
FY25, we expect to hold the credit cost at similar levels on an annual basis as compared to FY24. So we are expecting it to be in the range of around 1.2 to 1.3% on our average assets. The unsecured part actually is improving. If you look at it, we have shared the numbers in our presentation. So here you will see that we are still getting FLDG cover from the partnership businesses. So there we are getting the FLDG cover to the extent of 5%, so that's protected and it is in line with industry levels. The other businesses are performing in line with what they have been performing in the previous year, so we pretty much expect to hold it at same levels as last year.
Got that. Let me come back to you, Mr. Kundu. The RBI has been cautioning NBFCs on home loan top-ups and has been asking a few lenders to slow down on the growth front. Your overall growth is high. So do you intend to curtail loan growth?
See, in the case of mortgage, we have two products, one loan against property and home loan. Loan against property, the end use is to finance the working capital of the SME. So as such, their RBI doesn't have any problem. Now, affordable housing is mainly we are giving loan for either construction of house or buying the new property. So both are actually for the use of the customer. So there is no misuse of the end use what we are basically intending for. So therefore, both HL and LAP, which is expanding into new geography, is actually doing more businesses than the entire other businesses put together. And this has been discussed with the RBI, and RBI is quite comfortable. They were not comfortable growing the unsecured lending book, and which we are containing that. We said that our unsecured book and new book businesses all put together will be within 15% of the overall portfolio.
Mr. Kundu, how do you see your AUM growth going forward? I mean, this is around 35 to 38%. What we saw in the first quarter. What should we expect going forward?
See, in long-term basis, we are, saying that we will do 25% of the growth, and we are comfortable for that. As of now, since both affordable housing and loan against property have expanded into new geography, the growth levels are looking high. And as we move to the next year, then it will stable, because then we will have a higher base as well. So this year it might be in a higher side, but for a longer horizon we will be doing the growth of AUM at the rate of 25%, which we are comfortable.
Got that, Mr. Kundu. Final question before we let you all gentlemen go. Mr. Selvan, coming across to you. Well, rain has been heavy in various parts of the country. Do you see things improving going ahead? And what's the impact of monsoon on your targeted geographies?
Monsoon had been fairly, widespread, and it has. There is a positive news on that front, and so we expect that would have a positive impact on the rural economy. The other point to also note is the storage levels in the dams is also quite robust, which also gives the confidence that the subsequent crop will also be good. So thereby we expect 2 seasons of good harvesting that will come up. So this is a positive news, and we expect rural growth to be quite robust. And since a large part of our business is rural focused, we expect that to be positive to Chola.
What we'll do is we will take a quick commercial break here. Both of you, thank you very much for joining us. Great speaking with you guys here. We're going to take that break. Up next, we're going to be talking about more companies. REC management will join in to talk about their business outlook going forward. We'll also have a conversation a little later after that with Vikash Kumar Jain. We'll zoom back on markets. Stay tuned.
Welcome back. Well, we got a special conversation lined up with the chairman and MD of REC, Mr. Vivek Kumar Devangan. Hi, sir. Good morning and good to see you. And thanks a lot for speaking to us here on CNBC-TV18. Well, first, let's get a couple of numbers out of the way. For this year, you had raised your disbursement guidance for FY25. So what are you working with right now? If you could help us out with that number. And what does it mean for AUM growth as well?
Yeah. Last year, our disbursement was the highest ever. Last year, we had disbursed 1,61,000 crore.
But in the current financial year, in Q1, our disbursement was 43,652 against Q1 of last year of 34,133 crore, which has shown an increase of 28%. So we are quite confident that this disbursement will increase further and will be able to achieve disbursement to the tune of about 1,90,000 crore in the current financial year. With regard to asset under management, last year our asset under management had grown by 17% from 4,35,000 crore to 5,09,000 crore. In the Q1 of the current financial year, our asset under management has grown to 5,30,000 crore. So, in the quarter, if we compare Q1 year-on-year basis, our AUM has increased by 17%. So we hope that we'll be able to clock total asset under management to the tune of about 5,85,000 crore to about 6 lakh crore. In between this figure, we'll be able to achieve.
And that will be a percentage increase of how much, sir? Because we offhand don't have the immediate math with us. What is the AUM increase you're planning this year?
Around 17%.
17%. Okay.
Got it. All right. So 17% AUM growth with disbursements of around 1.9 lakh crore. Got that. You know, before we get to more company specific, I actually wanted to ask you about the health of the state discoms. Could you help us out with, how that's functioning? Because I recall the outstanding amount was more than 1 lakh. And then it steadily came down. But in the last few months, actually, that number has been more or less stable, I think at around 30,000 odd. So could you tell us how's the health right now of the state discoms and how do you see it pan out going ahead?
Two major reform measures have been taken by Ministry of Power, Government of India. This revamped distribution sector scheme has really brought in quite a discipline among the distribution companies. This RDSS is to improve the financial and operational efficiency of the distribution companies. You might have observed that AT&C losses have come down quite significantly in the last financial year. Now it is around 15.4%. From 22%, it has come down to 15.4%. Similarly, the government department dues have also come down quite significantly, and the legacy subsidy dues have also come down significantly. In addition, Ministry of Power had also introduced this late payment surcharge rule, which was notified in June 2022. Thereafter, the distribution companies have been clearing the dues of transmission companies and generating companies. Current dues are being paid regularly, and the legacy dues are getting cleared in equity monthly installment maximum for a period of 4 years. So it started from June 2022. By the end of May 2026, we hope that all these legacy dues of GenCos and transmission companies would be liquidated. So this has really improved the overall health of the distribution companies, more so because this result evaluation framework under RDSS is quite strict. And if the states are not able to secure more than 60 marks out of the 100 marks under result evaluation framework, they'll not be able to get Government of India grant. So all the states and distribution companies are making proactive. They are taking proactive measures to achieve this result evaluation framework targets.
Got that, sir. So on this point itself, the older dues are getting converted into EMIs and you're expecting all of that to be cleared by 2026, if I got that number correct. Yeah. What is the last updated number, though? Around 27 to 30,000 crores? Is that the last updated number?
Yeah. Because there are two things. Earlier, when we had started, the legacy subsidy dues were to the tune of about 1,35,000 crore. And this dues have come down significantly to about 40,000 crore. So we hope that by the end of June 2026, all these legacy dues would be liquidated.
Right. Mr. Devangan, good morning, sir. Prashant here. Last couple of years have been good, right? As you've said, some of these schemes which penalize states for not sort of keeping up with their payments, etc., and all of that has worked very well. But some have pointed out that we are starting the next wave of populist spending across states. That could have an impact on state finances going forward. I mean, we're at the start of it, another one. 3 states are going to polls now, over the next couple of months, more later. We've seen many of these schemes, not especially on the power side, but generally, you would agree. Would you worry about it?
Actually, this prepaid smart meter is going to be the real game changer. Out of 25 crore prepaid smart meters, about 14 crore have already been awarded. And now in the current financial, this installation of prepaid smart meters will pick up. This prepaid meter installation is going to be the real game changer because collection and billing efficiency of distribution companies will improve substantially because the consumer will be paying the electricity bill in advance through prepaid meter system.
But that is just one of the ways, right? I mean, if this, the point is, if a state wants to be populist and wants to kind of give free power, for example, right? I mean, would a prepaid smart meter stand in the way? I mean, it's one of the routes to implement discipline, but would it stand in the way of a state wanting to do it?
No, this prepaid smart meter regarding collection and billing efficiency. With regard to the freebies or the incentives being given by the state governments, what has happened that under RDSS, the state governments are committed through their cabinet resolution to pay their subsidy in quarterly installment. Like for quarter 2 subsidy, it is being paid in quarter 1. So this system is 99% states are paying the subsidy quarterly in advance. So I don't think it is going to affect. Let them decide to give whatever benefits they want to give a particular cross-section of the people. But they are adhering that they are paying to the distribution companies subsidy quarterly in advance.
And for the benefit of our viewers, RDSS is a revamped distribution sector scheme, and we came here after a long and difficult road and journey to get some of these schemes implemented and to get the DISCOM dues lower. And we hope that, obviously, that reform process is not thrown into reverse gear. Sir, just want to come to now some of the business parameters and really strategically, what is the roadmap ahead for REC? If I look at your AUM mix, generation, which I guess you classify largely as thermal generation, that's about almost a lakh 50. Renewable energy is about 43,000, and of course transmission and distribution is a very big chunk of your overall portfolio. Now, going forward, will you be focusing more on renewable or will it continue to be thermal? Because even on thermal, I mean, there's a huge amount of capacity being added, right? We all know the target 80 gigawatts by 2032. So where will growth come in from? Will you chase renewable also? What is profitable in terms of just perhaps better yields? Because your NIMs have been looking very good this quarter, but now I'm asking for a vision for, let's say, at least the next year and a half. Yeah.
In fact, as I had told in my initial opening remarks, that we are targeting growth about 17% in our asset under management. And by the end of 2030, we are targeting asset under management to the tune of about 10 lakh crore. And we are giving a special focus on renewable energy projects, covering the entire gamut of renewable energy projects, be it solar, wind, hybrid solar, wind, the solar module manufacturing, wind turbine manufacturing, storage system, be it battery energy storage or pump storage hydro projects, green hydrogen, green ammonia, electric vehicle, and the associated charging infrastructure. Right now, as you rightly pointed out, our loan book for renewable energy sector is about 43,000 crore. This will see a substantial jump in next 5 to 6 years. By the year 2030, we are targeting renewable energy portfolio about 3 lakh crore. And conventional
allow me to understand. Sorry, if you could just allow me to come in and understand. So the reason I'm asking renewables is that there are other agencies like IRDA, for example, right? I'm just trying to understand whether lending to the renewable sector is more profitable or whether thermal makes more business sense for you, or whether it's equal in terms of yields. And therefore, what should we expect on margins over the next 1 year, let's say, on net interest margins from a yield perspective? And then you tell us the cost side as well, the cost of funds.
From yield perspective, definitely coal-based generation gives us a better yield as compared to the renewable energy projects. But there also our margins are quite healthy with regard to renewable energy project. Since Government of India has decided that they are going to install country will require about 94 gigawatt capacity by the year 2032. So we will see that there will be substantial loan book growth in terms of coal-based generation. And with regard to renewable energy, since it is intermittent in nature, country will still require coal-based capacity, which is going to provide base load. So we see that we'll see growth of about 17% in both renewable energy projects also, and in coal-based generation capacity loan for REC. And our market share so far in both renewable energy and conventional coal-based generation has been about 20%. We hope to maintain our market share of 20% in both the renewable energy as well as in coal-based generation capacity.
Okay, all right. That was going to be my next question then, sir. Just before we let you go, banks are sniffing there's a big opportunity as well, and they're gradually trying to up the ante in your space. Do you think the pie is big enough and everyone can grow out there? And I ask you this because your lending rate is still close to around 10%. Which is quite elevated. Is there a risk to that 9.99% yield that you're getting currently? And what does it mean for NIMs from here on? You've been holding at around 3.6%. Do you think you can continue?
Yes, we have done a detailed analysis. We'll be able to hold on to our spread about 2.8 to 3%, and our net interest margin will be around 3.5 to 3.7%. That will be able to hold on. With regard to this yield from renewable energy projects, it varies from 9 to 10% depending on the rating of the entity which is implementing this renewable energy projects. So we hope that we'll be able to hold on to our spread and net interest margin because we are making continuous efforts to reduce our cost of fund. It has come down quite substantially. Last year, our cost of fund was 7.28%. It was brought down to 7.13%. In the Q1 of the current financial year, our cost of fund has come down to 7.05%. And we have also increased certain, because we had not increased our lending rate for a long time. It will be evaluating, and if required, lending rate by the banks will have to remain competitive in the market, and will be offering a competitive interest rate.
Absolutely. Mr. Devangan, all the best to that and to your team, which is executing well. Thank you very much. You find yourselves in a upcycle, and we're happy to sort of bring that story to our viewers. Thank you very much for being here on CNBC-TV18. The stock's on your screen. 600 odd is where it is at. Vikash Kumar Jain is now with us, India strategist at CLSA. Vikash, good morning. Good to have you with us here. Thank you for joining us. I was looking forward to speaking to you at 9:15, but 9:50 is close enough. How are things, Vikash? Talk to us a little bit about... Actually, let me pull on what we were discussing with the management of REC earlier. We were talking about sort of, populism making a bit of a comeback, right? If you take a look at the last 10 state elections across the board, all of them pretty much have seen, schemes one way or the other. Most of them have been directed towards women, but there is also free power, free gas, and many other things. And once you roll these out, it's very difficult to take it back. It only expands. You can't stop it, right? Now, we are again entering into an election season with the big election, which is in Maharashtra about a month and a half ago, from now. Is it a factor, or do you think, as some have said, well, if general elections was barely a speed bump, why should these matter? Or do you think, it does matter? Are you hearing anything from investors on this? Go on.
So I think, firstly, thanks for having me. The context is what is relevant, because if you look at what we've had year to date to a large part, starting December, that was incidentally after the state election results, those state election results, we've had a very powerful rally on certain kinds of stocks, which have been more investment-linked stocks. There was a lot of expectation that with a stronger mandate that Prime Minister Modi could get, the same set of stocks will get wings, capex-linked stocks. The mandate was not as strong, number one. And interestingly, we did a report calling them Modi stocks, and how they've had a big party till election results. Interestingly, they have underperformed other stocks post-elections. So there's clearly a change in the fabric of this still a bull market. And that's something that needs to get recognized. There's context to it. I mean, these stocks had a median return of 50-55% median return over a 6-month period. So there was a lot of expectation baked into it. A lot of what you say in terms of populism, or at least not a very strong mandate means that you need to get concerned or you need to be a bit more cognizant of a stronger opposition, means that policy making will get a little bit less unequivocally focused on investments. Now, that along with the context of that kind of re-rating is what we need to be focused on, and that's where we tone down our focus. For example, we in our India portfolio that we've been running for about 3.5 years with reasonable amount of success. On the day of the election results, we let go of a key capex infra name, and we started focusing on elsewhere. So it'll become a much more normal market, is what our call has been, and that's something which I think in the second half of this fiscal will become even more relevant, to think about it as a much more normal market. Typically, election and big events like that have had this kind of a rally in anticipation, which at times gets pretty significant, and then a reality check. So I think that's something which we've seen many a times. This time, it comes in the form of this, all the things that you mentioned around state elections and populism and a host of other things. But the context makes it even more important. So I'm not saying that the multi-year infra theme is behind us, but clearly a lot of these stocks have possibly will need to catch up on some breath after the very strong period that they have seen. So that's the context bit that we need to think through when thinking about it. So for nearly 3.5 years, we've had capex and infra as a big overweight in our portfolio that we've had it. We kind of trimmed that. I mean, so that's something which just tells us the way we've been thinking about it.
Because that's pretty interesting. So the next question is that if you're trimming from capex and infra, where are you recommending to add positions? What should be then higher up in the portfolio now?
So, this is a bit of benefit of hindsight and maybe our luck. We replaced that capex and infra name with going overweight on IT, and which has been the star sector. But now the question is, what happens from here on? I would say that as we talk of a more normal market, we need to start thinking of what's been happening globally. Trust me, India behaved like an island through this period from December to June to a large extent, because we were far more focused on what happened to us domestically and the election, etc. And I think we get into very interesting times with the job report and the job revisions, etc., that we must have spoken about, and the Fed meet in September. Because even the most recent comments that have been coming out of our own central bank, they do not really want to think of rate cuts right now. And let's see what commentary comes out of Fed. Sometime we still believe that in the last quarter of this calendar year, the rate cut environment or hopes will rise in India as changes that are made by Fed. But more importantly, I think whether it's a 25 bips or a 50 bips is the flip that we talk about. And maybe tomorrow at Jackson Hole, we get a better sense of where it is likely to be. But I'll be more interested to hear after the rate cut, which is more or less a given in September from the Fed, what is the commentary like? If it's still dovish, then I don't know. I am not in the camp that I don't think RBI can stay away from it for such a long time. So I would say that whole rate cut environment coming up, or before that, a period where we are sandwiched from no rate cuts to rate cuts, there will be a period where there's going to be that confusion where RBI kind of cut rates immediately or not, or there's still a lot of delay. I think that's where new opportunities are likely to emerge. I would want to think of areas where rate cut excitement or where stocks are still okay and they are leveraged to rate cuts. That's where we need to start thinking about. I'm still not in that camp. We still have a pretty big overweight on banks. We still have an overweight on energy, and we still have an overweight on IT. Those are our favorite sector. But clearly, that's where we need to start thinking of, depending on what we hear from central banks.
Vikash, so talk about single stocks, stuff you've published, which is out there. I mean, if you can, where are these opportunities? Which are the top ideas for you now? Or you want to talk about? Yeah, go on.
See, we'll stay away from talking single stocks, as you would know. But you clearly have the stocks that CLSA likes or the stocks which are in our portfolio. Those are things that you would definitely have from reports that you might see. So, but there are still a section of rate sensitives where things have not, valuations are palatable. Now, there are some large cap NBFC names where valuations are palatable. There are some of these others which could get interesting. I'm not saying that they are interesting immediately, but if the rate environment kind of changes, those are things which could get interesting.
Sensitives is one. What about oil, which has come off sharply? I'm talking about international oil prices. You, of course, also track the oil and gas space in that entire sort of spectrum of stocks. But do you like OMCs? Do you have a view?
So, oil is a space where we have had a clear preference for upstream over downstream. Over the last few weeks, it's not really worked like that in terms of downstream. I mean, as in downstream has also got excited. But I would believe that somewhere around that $70 to $90 range is the happy range for oil for OPEC. We are towards the bottom end of that range. I would not really want to play in a lot of big correction from where we are here. There could be a little bit more, and there could be that settling down, because the event for oil that we are looking at is in October. Does OPEC start, kind of bringing back some of the production cut like they had thought about? I think they are very reactive to prices. With this kind of prices, there's a reasonable chance that OPEC delays that production increase that it has talked about. I think that might lend support to prices. So closer to 70, 75 for Brent is where I think the floor is. So I would not, I think a large part of that corrective trade has played out is the camp that I am in.
Since we talk about oil and gas, and we'll talk more about this name I'm talking about, RIL, in just a bit with another veteran analyst, a little in a couple of minutes. But Vikash, our Reliance annual AGM next week, Thursday. Are you is it a discussion point with investors? What should we expect? Is it going to be a big one with a major announcement? Usually there is.
Again, I'd stay away from, we keep writing about the name, and you can pick those, our opinions from there. I'll stay away from discussing individual stocks.
Okay. All right, Vikas, we'll leave it on that note. Thank you very much for joining in. Good having you on and getting our perspective on the market. Well, like Prashant mentioned, it's a full-blown conversation on new energy, renewable energy right now. Nuvama came out with a report, and I'll just read the first line of that report that really caught our attention, which is why we've invited Jal Irani to join in. Jal, great to have you on, and thank you so much for waiting by. I'm reading the first line from your report just to get the context going. The input price crash across the value chain, as well as the PLI rollouts for modules, electrolyzers and batteries, hugely enhances economies of scale and advances the timeline for round-the-clock new energy. I mean, that's great news to hear, right? But we want to distill this down to who benefits, which companies benefits, and really what's going on behind the scenes. So opening thoughts, should we be looking at the solar module crash? I mean, just, give us the context.
Actually, the whole new energy space is an extremely large and complex and multifaceted space. So one needs to start with sort of a top-down big picture first, because there are several sort of subsectors in this. See, the new energy space, as the term suggests, is actually relatively new to the world. It's effectively an EV moment to the world. And it's very simplistically green hydrogen and green ammonia, which could become a very significant source of energy, competing with the likes of coal, gas, oil over a period of time. And the feedstock for this is really renewable energy. That's where the term green comes from. Now, there is a number of things going on here, both both globally as well as in India, and both from a regulatory perspective, both from a sort of government impetus, as well as whole structural reduction in cost for the entire industry, which is what is making this compelling. Now, the at the sort of right at the upstream part of the chain, you start with module prices, because modules, I mean, in the whole chain, really, there's really no raw material. It's really, the sun, so to speak. And similarly, as you go downstream towards green hydrogen manufacturing, there's really no significant raw material costs. So therefore, it's really the cost of equipment. It's the capital cost which makes all the difference. And as a thumb rule in any solar project, modules was about half the cost of generating solar power, and the cost of modules has halved in the last year. So therefore, the cost of your upstream input is crashing across the board, and to that extent, making the whole chain dramatically cheaper. There are there are two elements to this. Of course, there is a structural element. So module prices have been falling now, for decades. And there's a cyclical element. Both are at a confluence and playing out very well. And now you're beginning to reach thresholds where the whole new energy space starts becoming very competitive. So that's really sort of a top-down summary and context of this whole thing.
Sure. So help us understand this, Jal, that when we're talking about, let's say, the near term, and give us some timelines as well, maybe the next 2 years or 3 years, when we're talking about India's renewable energy or green energy needs, is it going to be primarily driven by solar? So therefore, obviously, we need to look at what's happening on the module side. How much will it be sort of met through, let's say, green hydrogen, which is where Reliance's big efforts also come into play? There's green ammonia as well. So what's the mix? And therefore, we're trying to distill this down to stocks and companies who benefits, and just elaborate on RIL's own plans, because I think they're the new Gigaplex, that's coming on stream very soon. So really, who all benefits down in the chain, and what would be the implications for RIL as well from a stock perspective?
Okay, there are too many questions in there.
Complex issue. Apologies.
Sure, no worries. So in the renewable energy space, it's really solar power which is becoming significantly cheaper. And to that extent, in the last year itself, and solar power as an input really for the whole new energy space. So in the last year or so, we've seen nearly 20 gigawatts of solar capacities in the process of being set up. To put a base number to that, sort of prior to that, the number was less than 70 gigawatt. Now, to that extent, other sources of energy are barely growing. So it's really this sort of subsegment which is powering away the entire chain. Sorry, I forgot all your several other questions. We'll have to take it one by one. Can you repeat some of them?
Yes, Jal. So from a near-term perspective, near to medium term, who are the potential beneficiaries? Any of the listed companies that we should watch out for?
So look, like my predecessor, I don't want to get into companies in detail. We can talk about Reliance though. Now, before I actually talk about Reliance as well, one needs to understand that actually there are going to be several, not only multi-year, but multi-decadal stages where different industries could come into play and benefit over a period of time. Because new energy and essentially green hydrogen goes into, firstly, replacing gray hydrogen in existing user industries. Today hydrogen is a commodity which is consumed by refineries and chemicals, mainly ammonia, fertilizers. But that is produced from coal or gas, so therefore it's called gray hydrogen. Now, as the cost of green hydrogen continues to fall, it is starting to become very competitive versus gray hydrogen for existing uses, refineries, chemicals. So therefore, and by the way, India is already the third largest consumer and producer of gray hydrogen in the world. And in fact, the forecast is that by 2030, the consumption of hydrogen in India itself would double, almost entirely from existing uses. So as green hydrogen becomes viable, you're going to actually, the doubled capacity is going to come from green hydrogen in India itself. And the existing user industries, refining and chemicals, their cost is going to fall. And rather importantly, it's not just about the cost falling, but it is actually the whole industry turning green. Today the refining industry, the chemical industry is considered a bad word from an environment perspective. But you are poised to see a valuation re-rating as well, as not only the costs fall, but they turn green. So these are the two industries which benefit the most in the near term. And then progressively you've got, as other newer energy sources get replaced, for example, gas blending in your traditional CGD, etc., gas pipeline. Those industries will are beginning to get developed. In the longer term, the likes of steel and trucks could become an extremely large use. So to put that into context, today India's hydrogen consumption and production is 5.6 million tons. It's all gray hydrogen, right, from coal or gas. From refining and chemicals, you could add 5 million tons of green hydrogen by 2030. In the longer term, arguably 2040, 2050, you could add another 20 million tons of green hydrogen demand. So the numbers get astronomical. And to put this whole number into context, the entire global production of hydrogen, which is gray hydrogen today, is 90 million tons. So the numbers get potentially very significant as the cost keeps getting driven down further and further.
And Jal, as you said, sorry, short conversation, but as you said...
Sorry, just a clarification, the pronunciation of my name is Jal.
Jal, sorry, apologies. Jal, and you said the best way to gain exposure is, actually not the best way to gain exposure is someone who is across in the value chain, right? Someone like Reliance Industries?
Absolutely. Okay. So the industry is very nascent, and there are lots of companies which are attempting to do many preliminary things and jostling for a appropriate position in the pie. But the risk, nevertheless, at such a stage is astronomically high. I mean, think of this like an EV moment to the world. Other than the Tesla, among the original companies in the EV space, how many have survived? Really, almost none. And there were, like, I'm sure, thousands, if not tens of thousands or millions who attempted it. So similarly, basically here, there are many companies which are sort of doing little things in the space and dipping their toes. But what I find strategically very significant is how Reliance is going about doing it. It has actually thought through a very long-term, fully horizontally and vertically integrated, huge economies of scale game plan. And it is already bought out or partnered with more than a dozen technologies. And it is, also what differentiates Reliance among all the companies around the world is Reliance is already one of the largest producers and users of gray hydrogen. See, this is very important because hydrogen is an explosive molecule. You would have heard of a hydrogen bomb, right? It's got one of the highest calorific values. Technologies have changed and you can handle it, you can transport it. But at the same time, if you are producing at, if you're producing at the sort of a place where you're going to consume it, your benefit is the most. And as Reliance has got one of the amongst the largest refineries in the world, it's already among the largest producers and consumers of it in the world. So therefore, that's a significant advantage. And strategically, they have planned across the chain, horizontally, vertical integration, and some of the most enormous capacities. To put that into context, again, in for mostly solar power and round the clock, their target is to roll out 20 gigawatts in the next 2 years. The entire industry solar power generation today is 75 gigawatts. And I think today the largest solar power generators 10 gigawatts or not more. So within 2 years, they'll become twice the size of the largest. And in fact, aspirationally, their plan is to become 100 gigawatts by 2030. So the numbers get enormous, right? But it is important to have those sort of numbers and scale.
Yeah, absolutely. Jal, it's a pleasure and really an education when we speak with you. And I think it requires more time, and we'll do it with more time next time. Thank you very much for joining us and sort of running us through what's happening in the new energy space, and of course a fair bit about Reliance as well. Just as a disclaimer, Reliance of course owns a company which operates this channel that you're watching. So just a disclaimer, FYI. But we'll get back to new energy a little later. We'll take a quick commercial break. We're going to come back with Manisha, who puts the focus on commodities in just a bit from now. Stay with us. Okay, welcome back. 40 points on the Nifty, so there is a bit of a pullback from the day's high, but above 24,800 is where we're at. Mitesh is with us with what he'd want you to do now with almost about 45 minutes of trade behind us. Mitesh, what do you have?
Prashant, a couple of stocks on the radar. I think both United Spirits and UBL look good, so I've chosen a UBL as a trading recommendation. Buy here with a stop below 2010 and look for a target of around 2100 to begin with, and then maybe even higher levels eventually. And then Tata Consumer, I think, after a few days of consolidation, that's showing a very good hourly to hourly pattern breaking on the upside. So recommend a buy here with a stop at about 1180 and a target of around 1250.
Okay, all right, Mitesh, thank you very much for that. Well, let's quickly hop across to Manisha and look at what's making headlines in the commodities world. Manisha, over to you.
Thank you for that, Sudhir. Well, I'm looking at base metal prices, and within that, copper, it's called as daughter copper, and the kind of economic data that we have seen coming from Europe and US and China clearly has not been supportive. And with the numbers, when you read into the CFTC data, you will understand that many of the speculative long positions also seem to have now ended. And it perhaps is a new opportunity, but at these current levels, copper clearly seems to be struggling to hold those gains. Well, there is support at this point in time from the decline in dollar index. The bond yields are on the lower side. There also is support from the US rate cut expectations. If you look at the probabilities for the month of September now, there is a 100% probability of a 25 basis points cut and a 30% a lower probability of a 50 basis points cut as well. Well, that has been in conversation for most part of last month there. The other things to watch out really is, in sense of prices, is that while we have jumped from a 5-month low of $3.95 that was hit on 7th of August, we're trading at 4.1 at this point in time. And the reason for this is that the Chinese exports have eased from recent records. That tells you that the Chinese domestic demand also seems to be picking up. The other thing is, remember, we were talking about on how Chinese smelters have cut production because the TCRC was not in favor. But the latest report suggests that the Chinese smelters are now pursuing new projects to comply with output mandates. So that tells you that there could be more supplies coming in from China itself. The markets also are looking at inventory surge, and that is something that is keeping the prices in check. The LME inventories have tripled since the month of May and are trading at a 5-year highs right now. So in the month of May, the LME inventories stood at 103,000 tons. Right now, they stand at 320,000 tons. So the copper inventories since the month of May have tripled on LME. There are various brokerage reports as well suggesting that we're looking at a surplus now for this year and the next couple of years as well. 75% of inventories that are on copper are now in Taiwan and South Korea. There also was a very interesting report that came in from Macquarie, which says that the AV demand and the EV demand is not so strong right now, is the reason that they're looking at surplus in this year to the tune of 265,000 tons, next year at 305,000 tons, and by 2026 also they believe you could be looking at just more copper surplus continuing into the market. It's not just Macquarie saying that, by the way. You have similar report from BNP Paribas anticipating nearly 150 to 200,000 tons of surplus in this year. There also is a similar report from International Copper Study Group, which says that from the month of Jan to May, there already is a surplus of around 416,000 tons. So, well, yes, the copper demand is anticipated going forward from EV and etc. But currently in the spot markets, there is a surplus and even a discount in the spot markets as it goes to copper.
All right, Manisha, thank you very much for that. So that's commodities for you. We'll take a break. We are back. Markets, of course, holding with a 40-point gain. My colleague Lata will get chatting on It's the Economy segment with Asim Dhru, Managing Director and CEO at SBFC. That's the NBFC, and they'll decode trends in retail lending in India and what Asim sees going forward. Stay tuned.